Alright guys, and welcome back. This is the fast track course happening for CA Inter students May and November 2022. And today we are looking at direct taxes, income taxes, and we're going to take it up from there. So today's and the upcoming sessions are going to be about direct taxes. First, before we begin, let me tell you the schedule of what we are looking at. We have exactly 6 days for the fast track course for income tax. And how are we going to cover the 6 days? Let's try and figure that out. Today, that is day 1, we are going to look at only and only chapters. So we will look at the first chapter, introduction. Then we will do slightly different way of revision. We will do IFHP because that is very important. Then we will do residential status. So basically we will do chapters, and in the chapters we will cover all the concepts plus module sums. That happens today. We have another session tomorrow which is the same chapters, concepts, module, and same thing day after also guys, chapters, concepts, modules. So this is 1st, 2nd and 3rd of March. Guys, we are in March. Welcome to March. Let's make this month a very good month to remember. So these are the 3 dates where we will do the chapters, concepts, modules, chapters, concepts and modules. By then I think we should be fairly done with the entire portion, I think. If not, we will carry forward some chapters to the next 3 days. But the next 3 days are after a gap. Here also we've got a gap, and in real also we have a gap. So the 4th day will directly take 2 weeks away, and this is on the 18th of March. We have the next lecture, which is again, if there are any pending chapters, we will do the small chapters, and this basically will be the last few chapters like computation of income, return of income. And the next 2 days, 19th is a holiday because of Holi, but I don't want to plug in a lecture that day. 20th March and 21st March, these are the 2 days where we will do back-to-back sums just like we've done here. We will first do the MCQ booklet and the case studies, and here we will do the exam papers. So that's the idea behind doing this. So this is the schedule. So guys, any questions you have on the schedule should be now clear. So this is the 1st, 2nd and 3rd of March, and this is 18th, 20th and 21st March. This is how we will. Good afternoon everyone. This is how I plan to complete the portion so that we do really well. Also, the gap is a very nice gap for you to do other subjects or for you to do tax on your own also before we come and ahead and do some questions here. As direct tax will be taken off care really well with an exam focus. So you have to attend everything, and everything that is being done here also gets recorded and is uploaded on my YouTube channel also, in case you want to watch it from there as well. All my regulars are always here. I am very happy with that. And just the way we completed GST really well, we will also complete DT really well. Now in this, any other detail, yes, as you can see, there's a Telegram link which has uploaded already. You need to join the Telegram group, and this is the Google Drive link where everything will be uploaded. I have already uploaded the MCQ booklets etc. from yesterday. So GST more or less has been uploaded. In case I want to upload something more, I will. Otherwise it's done and dusted. The same link also has for DT or income tax. The same way there is a quick book. The same way there will be MCQ booklet. Everything is the same even in DT, and we will focus it on the same way as we have done GST. So all the best to you, all the best to me, all the best to all of us. Let's do this really well. Today is a very auspicious day of Mahashivratri, and with that blessings, let's start this portion, income tax. Alright, perfect. Guys, once we go ahead, in income tax, this is the second thing that I have started in my fast track, and this is also the second thing that you will do in your exam. So the exam, you will start with first GST paper. Both MCQs and the normal paper, you will finish GST, and then only you will start with DT. Even now we've done this. Even when you're revising, you will do the same. Even in the exam and before the exam, you will do the same, just the same way that we've done here. Guys, also announcing that I will be doing a marathon lecture. Maybe it's a YouTube live, maybe it's on Unacademy, doesn't matter when, but I will be doing a marathon for you guys just before the exam as well. either 1.5 days before the exam, so just after you come back from your exam, or just closer to your exam starting, I will do a marathon. So we will in about 8 to 10 hours we'll revise everything, GST, DT, everything. Alright, just thought I'll tell you about it. Anyways, so DT, but before we enter into the world of DT, let me tell you about the whole subject. How is it divided? Guys, in DT, the focus is on some or the other person. It could be Sourabh Mutha, it could be Gayatri, Nikita, it could be anyone, and they will talk about the legal status. Story also, yes, there is a legal status. That means who are you? Are you an individual? Are you an HUF? Are you a partnership firm? Are you a company? Who are you? That is the legal status. That more or less will be given in the exam sum. That Ganesh is an individual, Akash is an individual. So mainly for CA Inter, it is individual that they focus on. This is the first step. The second step is that individual, whether he's a resident or not, because a lot changes when you're a resident and a lot changes when you're a non-resident. So you have to determine the residential status. The residential status changes might change every year. So in your exam, if they give you resident, great. If they give you non-resident, great. But there will be a question for sure. Guys, I'm predicting one question. This is my prediction list. I'm predicting one question from this chapter of residential status and scope of income for sure. So you will have to determine your residential status, or they will give you the residential status. One of them will definitely happen. Then you will have different incomes. You will have some incomes from India, Mumbai, some from Bangalore, some from abroad, some from some received abroad, some received in India, different. So which of the incomes will be taxed in India will be determined as per scope of income. There's a lag. Okay, I'll wait. Let me know once the lag is done. When the lag is over, we will start. Is it better now? No, it's not. Okay, I'll wait. Okay, I'm just going to wait. If you tell me if it's better, then we will start. Perfect. Guys, scope of income tells you which incomes are taxable. Guys, think like the government always. As a government, will you want to tax as many incomes as possible? Yes, as a government, you would want to tax as many incomes as possible. Once you know the scope, there are 5 heads of income. Each head of income is an opportunity for you to earn money. But when you earn money, guys, do you also have expenses? If I'm teaching here and if I have a CA firm, do I have expenses? Yes. So same way, even in every head of income, in every head of income, there are expenses. So in salaries, do you earn salary from your employer? Yes. But do you have any expenses? Not too many, but will you get some deductions? We'll see. Yes. Next, when you have a house property like an office or a godown or a shop or a residential house which you give on rent, do you have some expenses like municipal taxes, like getting the house painted, like interest on the loan to buy that commercial property or that house? Yes, so that you get a deduction. When you do a business and profession and you make profits or gains, do you have a lot of expenses? Yes. When you make capital gain, this morning, today is Mahashivratri, so the stock market is closed. But when the stock market is open, you buy a share and you sell and you make money. Is there any cost and expenses? Yes. And when you have income from other sources, generally interest income, dividend income, royalty income, etc. Again, do you have any expenses? Yes, guys. So the government, although is very greedy, they are very well aware that you have expenses in relation to every income, and hence they give you deductions in each of them. So in each of these you will tax the net income. Yes. Once you finish that, sometimes you don't want to be taxed at a very high rate. Guys, while the government wants to tax you a lot, do you want to pay a lot of taxes? No. No one would want to pay a lot of taxes. So what you do is very smart, and Indians are very smart at tax avoidance, tax planning. You transfer your income to someone else, like you give it to your spouse. Maybe your wife or maybe your husband doesn't do much, he doesn't have too much income or she doesn't have too much income. So you transfer some income to your spouse or to your son's wife or to your children, so that your income tax is reduced and their income basic exemption limit is used. But the government catches you and tells you that we will add your income by clubbing. Just like the government wants to tax your income, they want to give you a set off of the losses you make. That's a very, very good thing. Set off is actually very advantageous for us, because the losses can be reduced, can be used to reduce your income. That is set off. And if you don't have enough income this year, you can even carry forward the losses. And that brings us to a very important point called gross total income. The gross total income honestly is a very useless number. Why do I call it a useless number? Because this number is not used to pay taxes. This number, from this number, the government encourages you to make certain payments. Like when you pay to your provident fund, or when you contribute for life insurance premium, or to national pension scheme, or Sukanya Samriddhi scheme, etc. When you buy medical insurance, when you donate, you can take deductions from here, from your gross total income. And when you minus deductions from your gross total income, you come to something called total income, which is a very, very useful number. Yes, very, very useful number. These are called deductions under chapter 6A. Absolutely right. 6 is Roman number 6, 6A. From the total income, which is a very important number, this total income is the one which is used to calculate your tax. And guys, tax rates are different from different people. We individuals have a slab rate. HUFs also have a slab rate. AJPs, artificial jurisdictional persons like temples, etc. have a slab rate. AOPs, BOI have a slab rate. So all of these have a slab rate. Companies have no slabs. So even on 1 rupee they have to pay tax, and so will partnership firms have to pay tax at a flat rate. So rates are different for different persons. Yes. So while we do one chapter, we'll also discuss rates of tax in the middle, just like in GST we did exemptions. So you will calculate your tax with the surcharge and with the cess, and that tax will have to be paid either through TDS or through TCS or through advance tax or self-assessment tax. There are no changes in the slab rates, thankfully. No changes in the slab rates. Absolutely don't worry. Whatever I'm teaching you is from an exam perspective, so everything updated is being taught. And then whatever is happening here, guys, this is all of this you have done with your CA. How does the government know what has happened to you during the year? So you will file your return of income and you will tell the government how did you earn this income, what is your tax, etc. So you will file your return of income. This is like a report card of whatever has happened throughout the chapter. And with that, we now enter into the world of the first chapter, which is introduction. And for that, guys, I'm just uploading the quick book here. This is the DT quick book. Yes, here is the DT quick book. Perfect. As the first chapter is basic concepts and introduction, it's a warm-up chapter. Let's do this. Direct taxes is very scoring, it's 60 marks. It has 10 chapters. Start the tax paper with GST and then proceed towards DT. In DT, starts with MCQ always, then optional questions, and then the compulsory question number 1. Statements and shortcuts are in this blue bracket, which we already know now. At least 3 sums to be written and practiced per chapter. Refer the SMAT book for understanding the chapters and this quick book for revision. In our fast track batch, we are only going to focus on this quick book. Go through the sums as they appear in the quick book. We will do the module sums as and when. Is quick book enough to clear the exam? Yes, definitely enough to clear the exam. And quick book plus the module questions is more than enough to tackle exam questions. But only thing you need to do is quick book is only to revise. After that, you need to keep doing sums back to back. Alright. So let's do this, guys. In DT, my entire DT works through an example of a surgeon, guys. So this is India, and in India there is a very hard working surgeon, and my entire DT works through his life. When he was at the age of 16 years, he took up his first job and he started earning salary income. When he was at the age of 22, he bought his first house property and started earning income from house property. At the age of 28, he started his business and profession. He started a 5-story clinic. At the age of 45, he started buying and selling assets and making capital gain. And at the age of 56, he started relaxing and earning IFOS incomes. These are the sections, section 16, 22, 28, 45 and 56 of the 5 heads of income. He is married to his wife and she is a jewelry designer. The wife is a jewelry designer. They have a couple of kids as well, which we will see. They have some children and they are very happy to be in India. But his father is a little confused about where to stay, because while surgeon is in India, surgeon has a brother who is abroad and the brother hardly comes to India. He doesn't like India too much. He hates India's traffic, India's food, India's pollution, and he's very well settled. He's very rich and he's very well settled in the US. He's an engineer by profession and makes a lot of money. He might have certain incomes in India, but otherwise he doesn't come to India very often. The father spends 100 days in India every year diligently, and after 100 days are over, the rest of the year the father goes and stays abroad with the brother. So father is here also and father is there also. And then when we move ahead, we will see all the different heads of income and we will continue working on this story. Just like in GST we had electric bike company, this entire story continues here, but the characters change. It's called the surgeon. DT is income tax. The story: surgeon, his wife, children, brother and father. What is the need to collect tax? Again, guys, the government needs money to spend and hence there is a need for tax. DT and IDT. DT is very good, it's progressive. IDT is aggressive. DT does not add to inflation, IDT adds to inflation, etc. etc. Levy of income tax. Who levies income tax? Not important, but you should know there is a Ministry of Finance, Nirmala Sitharaman. Department of Revenue, they collect this free money called tax, and there is Central Board of Direct Taxes, which is basically the boss of all the income tax officers. There is an Income Tax Act. This is how it is written, guys, in the exam. This is exactly how you'll write the Income Tax Act. Income dash tax T small Act big, 1961. And there are income tax rules in the next year. They forgot to make the rules, so made it in the next year. The act is basically divided into sections, subsections, clauses, and if there is any exception, they call it proviso. Guys, your intention should be to remember the sections and the subsections both. If you forget the subsection, the sections work, but try and remember everything. Aim for the best, at least you'll settle for something more than medium. Since the act is very old, 1961, it's amended every year. The amendment which applies to your year, guys, I am repeating this only once. The amendment which applies to your year is the Finance Act 2021. So if anyone says this year's budget, will it apply? No, guys, this year's budget will not apply. The May exam is already, question paper is already set. So hence, only Finance Act 2021 applies. So if this year you're studying for, the Finance Act of last year applies. A bill is not passed. Once it gets passed by the parliament, it becomes an act. Circulars are issued by CBDT, not important from an exam, and they are basically for their juniors, that is the income tax authorities, whereas for you and me, the government issues notifications. Case laws are not applicable for CA inter exams, not even one. Guys, these are different persons. In the exam, individual is the most important for CA inter exams. So individual can be a minor, can be a major, can be a lunatic, can be a deceased person. HUF, you know guys, a HUF, a Hindu undivided family, where it has a karta, it has co-partners. HUF can do business. The surgeon has an HUF. It's called the surgeon's HUF, which has rental income and FD income. Who pays the tax on this HUF income? HUF itself pays the tax. And what does it do with the profit after tax? It distributes it to the members. It's called the share of income of the members, which is exempt because once it's already taxed, it will not be taxed again under section 10(2). Now guys, Karta and co-partners can be male, female, does not matter. It's a world of equality. Everyone can be members, Kartas, co-partners, etc. Wherever I speak about firm, LLP also works in the same way, and the firm and LLP, surgeon and his 5 friends started a partnership firm, guys. Surgeon's 5 friends, including himself, started a partnership firm, which is called Syringe and Co. What do they make? They make syringes that are injections. These injections are painless. So if you ever want to get an injection, ask for Syringe and Company's injections. They are painless. They made a lot of money. And who pays taxes on this? They pay the taxes. The firm pays the taxes on this. And what do they do with the profit after tax? They distribute it to the partners in the profit sharing ratio. And then again, is it taxed? No. In the hands of the partners, the share of profit is exempt under section 10(2)(a). So HUF income, share of members is exempt, and partners share of profit is exempt. Very important. Just 1 second. Hello. Sorry guys, I'm back. Yes. So the share of profit of the partners is exempt. Same way for the HUF also it's exempt. Next is the Indian company. Guys, Indian company is like Reliance, ICICI, even Unacademy. The moment you are registered in India, you become an Indian company. But companies like Tesla, companies like Apple US, companies which are abroad are called foreign companies. Association of persons. When the surgeon and a hospital came together to conduct a camp for vaccination. Guys, the surgeon and the hospital conducted a vaccination camp for COVID and they made some money. Now, what is this? Because one is an individual and one is a company. So together when you come, and if you don't have a partnership sharing ratio, you are called an AOP. AOP is nothing but almost like a profit sharing ratio, a partnership firm, but there is no profit sharing ratio decided and hence it's called an AOP. And same way, a body of individuals. If let's say you, your friend and your neighbor, all 3 of them are taking care of an old man and he is no more and he gives his house in his will to y'all 3. Y'all 3 will earn the rental income even though you did not plan to do it. That is body of individual. A body of individual is only individual. Association of person can be any person. An association of person is planned and you have intention is to earn money. Here it is not planned, it is because of operation of some law. Both of these are very similar to partnership firm, only thing the profit sharing ratio is not decided. Local authority is like a municipal body. In Bombay we have the BMC, those are local authorities. Next, an artificial jurisdictional person is like a trust, a temple trust, etc., AJPs. Each of the above persons pay their own taxes and have their own PAN number. Guys, all of them pay their own taxes. What is beneficial interest? Guys, if Mukesh Ambani holds 10% or more in Reliance, that is called beneficial interest. And if I hold 10% or more in the profit sharing ratio of my partnership firm, etc., then so 10% or more is called beneficial interest. And what is substantial interest? 20% or more is called substantial. So only percentage changes. How do you remember? B comes first, so B is 10%. S comes later, so it increases to 20%. Assessee is a person who is supposed to pay tax to the government. So right now you are not an assessee, I am an assessee. Financial year is every year from April to March is financial year. For your exam, the previous year is 21-22 and the assessment year is the next year, that is 22-23. Calendar year is not important from your exam perspective, but from 1st Jan to 31st December, the one we celebrate on 31st December is called the calendar year. Next guys, financial year in case of a new entity. If I start a new business today, can I start a new business on 1st of March? Yes. So from 1st of March till 31st of March will be my financial year. Yes. Assessment, guys, once you file your return, the income tax authorities will check you and you will get assessed, which we will see at CA final. Guys, income is all incomes. Please, I'm giving you examples. Please tell me if it's income. The earnings that I make from my classes, is that income? Yes. The earnings from my CA firm, are they incomes? If I do if let's say Shah Rukh Khan makes one movie in 4 years, is that also an income? Yes, whether it's regular, whether it's irregular, whether it is even illegal income, guys. If it's caught, it can be taxed. So income is all kind of income except PIN money. What is PIN money? PIN money is what you give it to your parents for household expenses. That is not income. Income should be real. It should not be fictional or imaginary. And if I take a loan from a bank, that is not an income, that is a capital receipt. Alright. So this right now, guys, this, just one second. Yes, sorry. This right now is income. These are the definition of income, not very important from an exam. Just keep in mind incomes, any income, think like the government. Would you want to tax it? Yes. And these are the steps till tax payable. We've already discussed the steps. Rounding off, guys, two places we round off. When we come to rates of tax, we will discuss that. But right now, let's discuss one rates of tax. Guys, rates of tax we have to discuss in parts because rates of tax are different for different people. So every time we finish one chapter, we'll decide a rate of tax. First, rates of tax we'll discuss for individuals. Pay attention, guys. Individual can be a resident, who is 60 years or more, can be a resident who is 80 years or more, and also can be a non-resident. So first, after this chapter, let's only discuss for resident and non-resident, only for individuals. Okay. Now, every resident or every individual, first let's focus on this guy. Sorry. Will have a basic exemption limit of 2,50,000. That means up to 2,50,000 it will be nil. From 2,50,000, above 2,50,000 to 5 lakhs, it will be taxed. You will be taxed at 5%. From 5 lakh to 10 lakh, you will be taxed at 20%, which is a big jump, guys. From 5 to straight 20%, it's a big jump. And from above 10 lakh, you will be taxed at 30%. So what is the minimum rate of tax? 5%. And what is the maximum? 30%. But this is a big jump. Also the slabs are very uneven, 2.5 to 5, then straight 5 to 10, and then 10 and above. Sorry. Guys, here if you're 60 years or more, then congratulations, you have a slightly higher basic exemption limit of 3 lakhs. From 3 lakhs to 5 lakhs, you have at 5%. From 5 lakhs to 10 lakhs, you have at the rate of 20%. And from above 10 lakhs, you will be taxed at 30%. Guys, here please keep in mind that you getting a 50,000 basic exemption limit, a 50,000 higher basic exemption limit. And here if you're 80 years or more, then your basic exemption limit becomes 5 lakhs. So you don't have the first slab, no. Straight 5 lakhs to 10 lakhs, you will be at 20%. And above 10 lakhs, you will be at the rate of 30%. Guys, this is what it is. So every person gets a basic exemption limit, yes, 2.5 lakh, 3 lakh and 5 lakh. Now the brother who's a non-resident, he's also expecting a higher basic exemption limit, but guys, the government says, listen, you don't vote in India. You hate India, you don't vote in India, why should we give you a higher basic exemption limit? So we will give you a basic exemption limit of only 2.5 lakhs. What if he is more than 60, more than 80 or 60 and 80, still only 2.5 lakh, no higher basic exemption limit. From 2.5 to 5 lakhs, same at 5%. From 5 lakh to 10 lakhs, same at 20%. And from 10 lakh above, straight at 30%. So for non-resident guys, remember, they don't vote in India and hence we don't give them a higher basic exemption limit. This what we've just done is called basic tax, guys. This what we've just done is called a basic tax. Always after basic tax you will see B, and guys, what are these incomes? All rates of tax focuses on is only one number, that is total income. So I told you total income is very important because all the rates of tax are based on only one income, which is called total income. Now guys, after this is a small concept of rebate. Let's finish that and then let's move to the first chapter, that is IFHB. In rebate, guys, this rebate is also a very nice strategy to get votes by the government. They called rebate under section 87A. Here they said that, listen people, if you are poor, not very poor, but if you are poor in terms you don't have too much of income, that means if your total income is maximum up to 5 lakhs, which is actually not poor, but it's not very rich also, that if your total income is up to 5 lakh in India, most of the people are here guys, because we are a developing country. So this covers a lot of people. So if your total income is up to 5 lakh rupees, then don't worry. Whatever basic tax you are paying, first calculate that. Okay, so rebate is always after basic tax. Yes, remember guys, rebate is always after basic tax. And whatever your basic tax is, we will give you a rebate of maximum 12,500. So if let's say your income is 3,75,000, then up to 2.5 lakh rupees nothing. From 2.5 lakh to 3,70,000 on 1,25,000 at the rate of 5%. So your basic tax is 6,250. You'll get a rebate of 6,250. So always think about it guys. Your rebate is calculated on basic tax and it is maximum 12,500. This is given to everyone except non-resident. Don't get rebate. Why? Because again they don't vote. So no higher exemption limit for non-residents, no rebate for non-residents. Rebate is under section 87A. Guys, rebate is given in a very secretive manner in the exam. They will not tell you it's a rebate. They will just give you a question where the total income will be up to 5 lakh. If the total income is up to 5 lakh, example, if it's 4 lakh, 4 lakh 20, 3 lakh, 3 lakh 20, even including 5 lakh, exact 5 lakh also, we will get a rebate. But even 5 lakh and 10 guys, if your income is 5 lakh and 10, will you get a rebate? Sorry, you will not get a rebate. In this case, you will change your CA. Because for just 10 rupees more, he's made you pay taxes. Otherwise, you would have saved 12,500 rupees. Perfect. So this is rebate. This is basic tax. This was your first chapter. And now we are going ahead, not to residential status, but to the next chapter, which is called, I'm going to do income from house property first. Let's do very interesting chapter. Also something that is definitely going to be there in your exam. Guys, what we will do is we will discuss one chapter. And then we'll go to the module and discuss the sums. So basically, I'll just see how many chapters do we have. 1 second. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and agriculture income, dean income 13, 14. 14 incomes, and we have about 24 hours to do this 14 chapters. So we have about 24 hours into 60 minutes. So we have about 100 minutes or 1.5 hours per chapter. Let's make the most of it. Perfect. Some chapters will take us more time than that, some will take less, but that's how we will go ahead. So right now it's income from house property. Very interesting question from this chapter. First, what section does it start at? It starts at section 22. If you're the owner of a house property, then an house property can mean your house, can mean an office, can mean anything. But if you're doing a business of rental, then it will go in PGBP. This is not a business. The moment in the exam business comes, you'll go to PGBP. So you can have a house, you can have an office, you can have a godown, you can have a garage which you are renting out. The section is, this is the charging section, and the computation section is 23. So section 23 is what we are looking at first. And the first thing that you do with your house property is you let it out. It's called LOP. But guys, the government doesn't believe what you are saying is the rent, because what if you're lying? So they always compare your actual rent, which is for 12 months, assuming you have the house for the entire year, with an expected rent for 12 months. So you can always compare apple with apple. Yes, be careful guys. First, what is expected rent? The government expects from a house property, they expect certain rent. So they say that municipality will figure a standard. Municipality will figure a standard, that is municipal value. Let's say the municipal value of the house is 8 lakhs for the entire year. The fair rent is 9 lakh. So whichever is higher, so 9 lakh, but it should be within a ceiling of standard rent, which is, let's say, 10 lakh. These are examples guys. So what is M? Municipal value. What is F? Fair rent in your area. What is the rent? And what is the standard rent? Guys, don't go into details of what these are. They will give you in the exam. If they want to give you these three, they will give you in the exam. What if they give only two? Then you have to compare only these two. Remember, the standard rent is just as a ceiling. You can never break that ceiling. So what if this is 19 lakh? Can I take 19 lakh? No, you will maximum be able to take only 10 lakhs. Perfect. This is expected rent. The government is expecting this much from you. What is the shortcut? Municipality figures the standard. Here it is, municipality figures the standard. I have incorporated all the shortcuts in the QuickBook only. So it's the higher of actual rent or expected rent. Expected rent is higher of fair rent or municipal value, whichever is higher, subject to the standard rent. Guys, expected rent, they don't care if you don't get some rent. Unrealized rent is like bad debts. They don't care about it. If your house is vacant, vacancy loss, they don't care about it. They don't care about anything. All they want is they want 8 or 9 lakh, whichever is higher, as income from house property. Next, your actual rent is what you've rented the house for. Let's say you've rented it out for 1 lakh rupees a month. That is, your actual rent is 12 lakhs. Yes, it is 12 lakhs. But guys, can it happen that someone does not pay you your rent? Yes, you can have unrealized rent. Unrealized rent is like bad debt. Can you minus it? Yes, you can minus it, provided 4 conditions are satisfied. Legally vacate other building or legally vacate our building. You should take legal action against that person who's not paid you rent. You should ask him to vacate the property. No other building of yours should be with him, and the rent agreement should be bona fide. Bona fide means it should be in good faith. It should not be to cheat the government. Let's say he did not pay you rent of 2 lakh rupees. Can you minus that 2 lakh? Yes, you can minus it. Rule 4 says 4 conditions should be satisfied. The shortcut is legally vacate our building. In the exam, they will just tell you rule 4 conditions have been met, so you can minus it. Yes, and this 10 lakhs is what you will consider. Yes. Now guys, there is a concept of vacancy loss. What is vacancy loss? When in your house you don't rent it out, okay, and you don't even stay in the house. So that means when you ring the bell, will someone open the door? No, no one opens the door. You ring the bell, no one opens because there is no LOP, there is no SOP. Then that period for which the house is completely vacant, that period for which you will not get rent, is called vacancy loss. But how will you calculate the vacancy? Because there is no one in. So the last rent you got, for example, from April to January, if you were giving the house on rent for 1 lakh, but for February and March there was no one, then 1 lakh is what your vacancy loss. So last rent that you have will be considered as the vacancy loss per month. So let's say here for 2 months there was vacancy loss. Can I minus vacancy loss? You know guys, vacancy loss cannot be minus from ER. It can only be minus from AR. I am giving you a shortcut, which is a very, very good shortcut. You can minus vacancy loss only and only if your AR is greater than your ER. What is the ER guys? Out of these 3 amounts, ER is 9 lakh. Is your AR greater than your ER? Yes. If that is the case, that's the biggest shortcut you will see in house property. If your AR is greater than ER, then can you minus vacancy loss? Yes. If they're equal, you can't minus. Only if your AR is greater than ER, can you minus 2 months vacancy loss? Yes. And then what if it becomes lower than ER? Then you don't even have to see ER, you will have to cancel out ER. So the moment you want to minus vacancy loss, again I repeat, vacancy loss can be minus only when your AR is greater than ER, and once you minus vacancy loss, or once you try to minus vacancy loss, then you ignore ER completely. So now what is your actual rent? Your actual rent is 8 lakh. But it is lower than ER. I don't care. ER is to be ignored after that. I hope you understood this. Good. This is the concept of unrealized rent. This is the concept of vacancy loss. If house property is not occupied, no LOP, SOP, then loss for the period is called vacancy loss. Such vacancy loss can be deducted in the calculation of GAV only if AR is greater than ER before deducting such vacancy loss. Now that you've got the actual rent, we can now proceed ahead. This actual rent will be called GAV. Guys, I'm taking it here. This actual rent will be called gross annual value, which is 8 lakh. As sometimes it is AR which is more, and sometimes it can be ER which is more. But remember, even if they give you monthly calculations, you have to multiply with 12 months, assuming the house is there for the entire year. But guys, what if the house was bought on 1st July? Then both of them will be 9 months. Now from GAV, guys, this is what, are you offering some income to the government? Please tell me, are you offering some income to the government? Yes. So the government says, listen, it's a give and take relationship. Guys, do you remember give and take from ITC? Yes. Same way here also there is give and take. Are you offering some income to tax? Yes. So the government says, I am very proud of you. I will give you deductions. First, municipal taxes, but only if you have paid during the year. During the year means till 31st March, yes, not after that. If you paid after that, you'll get the deduction next year. So if municipal taxes you paid, even if you paid for last year, even if you paid in advance for next year, whatever you paid, you will get a deduction. Yes, let's say you paid 1 lakh rupees. Will you get a deduction? Yes. Remember, municipal taxes can be given as a percentage also. If they say municipal taxes is 10%, then 10% of what? 10% of municipal value. Remember this could be a trick. So if they write 10%, 12%, it's not of GAV, it's of municipal value. Municipal tax is a percentage of municipal value. If they give you directly the amount, you can minus the amount. Guys, this amount is only if it's paid. What if your tenant pays it, then you don't get a deduction. But what if your tenant pays it and you paid it to the tenant, then you indirectly you paid, you'll get a deduction. And this is your NAV, net annual value, 7 lakhs. Guys, from this, because you are renting out a house, you will have expenditure like painting, changing the locks, repair, etc. For that, the government gives you a flat 30%, and that's the reason the shortcut is A for ad hoc. Yes, A for ad hoc. Ad hoc is 30% reduction. Yes, I call it ad hoc deduction, A for ad hoc. It is basically a standard 30%. What if I've spent more, even then 30? What if I've not spent nothing, even then 30? Do I have to pay it? No, guys, you don't have to pay. Only municipal taxes on payment basis. So 7 lakh into 30% will give you 2 lakh 10,000. And guys, if this house has been taken on loan, you can buy a house property on loan. Yes, the loan can be from your friend, can be from your family, can be from your bank, can be from anyone, even abroad, doesn't matter. That interest can I minus? Yes, that interest I can minus without any limit. Yes, without any limit. Let's say the interest was 30,000. The surgeon took a loan from his brother and he paid interest, not principal, guys. Interest of 3 lakh 60. Principal payment also you get a deduction, but under 80C, which we will see ahead in chapter deductions. But right now B is for borrowing. That's my shortcut, guys. A is ad hoc 30% and B is borrowing. On the borrowing, can you minus deductions? Yes. On the borrowing, you can minus deduction. There is no limit to the amount of deduction you can take under 24B. Now, what is this interest? Let's see here, guys. This is 24B interest. Interest is two parts. One is current year interest and one is PCP interest. I'll tell you what is current year interest and what is PCP interest. Current year interest you get 100%, that means the entire amount, and PCP interest you get only 1/5 every year. I'll tell you what this is. Let's say, guys, you took a loan in the year 2015-16 to construct your house, and this is the construction phase, and your house finally got completed today, that is 1st of March 2022. Please tell me the financial year in which your house got completed. Which is the financial year in which your house got completed? It got completed in the year 21-22. So this year is called the completion construction year or the current year. This year and every year after this will be called the current year. So in this year, if you paid 3,60,000 interest, the entire thing you will get, or only after 1st March? No, the entire thing you will get. Guys, let me repeat. Whichever, even on the 31st March, if I complete my house, the entire year's interest I will get. Yes, it is called current year, and every year after this I will get 100%. So 3,60,000 I will get. Yes, definitely. But before this year, so you have to put a bridge, guys. You have to put a bridge between current year and previous years. Before this year, which years? 2015-16, 16-17, 17-18, 18-19, 19-20, 20-21. These are all the years before this year. Yes. In all these years, you paid interest of 10 lakhs. Guys, can it happen in the year of construction you pay interest? Obviously, a bank has given you money, you will pay interest. Can that be allowed also? Yes, allowed, which is great, but not at one go. 1/5 every year. So starting which year? Starting the year of completion construction and 4 more years. So 3,60,000 you will get full. Yes. And what is the PCP interest? The PCP interest is 10 lakh. You will get 1/5 every year for 5 years, starting consecutive years, guys, starting with the year of completion of construction. They will give you different dates. They will tell you completed your construction on, guys, tell me, if I completed my construction on 30th September 21, which is the financial year in which I completed? 21-22. So which is the current year? 21-22. So it doesn't matter when you completed, the year you completed is that called construction completion year. That year and after, all the years are called current year, 100%. Before that year is PCP interest. That, guys, I can minus. So I can minus 3,60,000. Can I minus 2 more lakhs of PCP interest? Yes, I can minus 5,60,000 also. And when I minus all of this, let's stick to 3,60,000 only. When I minus 3,60,000, what remains is my income from house property. So 7 lakh minus 2,10,000 minus 3,60,000 is 1,30,000. This is what I will offer to tax. Yes, this is what I will offer to tax. Can I have more than one house properties let out? Yes. You will do the same calculation every time. Only 3 deduction. Municipal tax is what I paid. 24A, 24B. Guys, what if the house is abroad? Same calculation even if the house is abroad, but if you are a resident, it will be taxable. If you are a non-resident, it will not be taxable. We will see ahead in scope of income. This is LOP 23.1. What if, guys, this is not LOP? What if it is SOP? Guys, what if it is self-occupied property? That means you or your family stay in that house property. Then, guys, they will say that GAV is nil. Please tell me, if your GAV is nil, is there anything you are offering to the government to tax? No. If you are not offering anything to the government to tax, will they give you municipal tax deduction? No. So what will your NAV be? Nil. Will they give you 24A deduction? No. Only deduction they will give you is 24B. Why? Because anyways, first you are paying interest to a bank, they will tax the bank. And here they want to give you a benefit. They want people to buy a house on loan. So 24B, they will give you a deduction. This is the same calculation as earlier. 3,60,000 in the current year, 2 lakh of PCP. How much is that? 5,60,000. But can you take 5,60,000? No. The only time there is a cap in 24B, there is a limitation of interest. It is here, which is maximum 2 lakh. Not per house, but per person. I'll tell you what that means. So first, can I minus anything? No, guys. My favorite is SOP calculation because everything is nil except interest. Is interest the same? Current year 100%, PCP 1/5. Yes, interest is the same. But only thing is, when you calculate the interest, you put a cap. When you wear the cap, what do you see written? SOP. Only SOP has a capping of 2 lakh. But this 2 lakh capping can reduce substantially if you don't fulfill 4 conditions, guys. That means for 2 lakh you need 4 conditions. For 2 lakh you need 4 conditions. What are the conditions? Here it is. The shortcut is, you need to certify 5 accounts for 99 rupees. Guys, here it is. All these shortcuts are given here. I'll just show you the shortcuts here. This is SOP. IFHP under SOP is actually a benefit in case interest is paid towards such SOP. This benefit is only available to individuals and HUFs. Guys, only individuals and HUFs can stay in a house. Have you ever heard a company staying in a house, guys? Have you ever heard a company staying in a house? No, so it's only for individuals and HUFs. The maximum benefit of deduction under 24B is up to 2 lakhs if the following 4 conditions are satisfied. Certify 5 accounts for 99. What are these? First, the loan should be taken on or after 1/4/99. Have you taken a loan for a house? Yes. From whoever you've taken, the loan should be taken after 1/4/1999. The loan should be taken only for acquisition or construction of house property. That means what can you not do? You cannot do reconstruction, renewal, repairs through that loan. Next, if it's for construction, then in the year you started construction, after that you have 5 years to finish. So basically within 5 years you need to finish. And last is certify. You need to get a certificate from that lender that yes, he's paid me so much interest. So certify 5 accounts for 1999, 1/4/1999 on or after that. It should be for acquisition or construction. It should be only for 5 years. It should be if construction is there, it should be completed within 5 years, and there should be a certificate from a lender that yes, I have paid. This person has paid me interest. If these 4 conditions are satisfied, how much limit, guys? How much deduction? 2 lakh. But guys, even if one condition is missing, like you've taken the loan before, or the loan is for reconstruction, then straight away the limit becomes 30,000 only. Yes, 30,000 only. So it's either 2 lakh or 30,000. It's a big drop. So be careful in the exam what it is. Now guys, earlier you could have only one SOP. Now you can have 2 SOPs. Yes, in India. Yes. So the second SOP also, everything will be nil, but you will get 24B deduction again of 2 lakhs. You can take again of 2 lakhs. No, this SOP plus this SOP maximum should be 2 lakhs. So if this is, I'm just giving random numbers. If this, let's say deduction is 1,60,000, first calculate normally, and this is 1 lakh. So will you take 2 lakh deduction, 2,60,000? No, sorry, it will be limited to 2 lakh rupees. So hence I say this SOP benefit is per person 2 lakhs. Guys, here please understand, if I am staying in Bombay, if I have a house property where my family is staying in Bombay, but for work purposes I need to go out to Delhi, I need to shift to Delhi, but they still stay in their house, or my entire family is with me in Delhi, but the house is empty here, I'm not getting any benefit, even then it can be considered as an SOP. So SOP is when you're staying in it, yes. When your family is staying in it, yes. SOP is also when you can't stay in it because of any business or profession or transfer. So that is SOP. I'm just reading SOP, so we'll complete that. Certificate. Benefit of SOP can be taken for up to 2 house properties, but the maximum interest deduction together will not be more than 2 lakhs. So 30 cases as the case may be. Thus such deduction is per person and not per house property. House property can be considered SOP even if the person cannot stay in the house property due to reason of job, business and profession at a different location, so long as no other benefit is obtained. Perfect. Now guys, so we're done with 23.1. What is that? LOP. We're done with 23.2. What is that? SOP. Now let's go to the next one, 23.3. Guys, you have one SOP. Congratulations. You have one SOP, another SOP, congratulations. And you have the third SOP, but the government says, listen, this is a problem. You cannot have more than 2 SOPs. But I'm Mukesh Ambani. I want to have a house in every city of the country. Yes, we won't stop you. You can buy as many houses as you want. But after 2 houses, or whichever 2 houses you select, you can select any of these 2 houses as SOP. But after that, the next house, so let's say this and this are selected as SOP, from this house onwards we will consider that as deemed LOP. Deemed, so you are assuming an income. Yes, this is an assumption of an income. We will assume an income, so obviously there will be no actual rent, it will be only expected rent, that is municipality figures the standard. Guys, will there be any unrealized rent? No. Will there be any vacancy loss? No. So you'll have a GAV, yes. Please tell me now, are you offering something forcibly also, but are you offering something to the government? Yes. So will you get deductions in municipal tax? Yes. So you'll get NAV. Then will you get deductions in other things like 24A? Will you get deduction of 24B? Yes. Everything is the same. Only thing is there is no AR because you've not actually rented it out. It's a deemed let out property. So this is your 23.3 deemed let out property. Let's just read it from here. Section 23.3 let out property for part of the year. Sorry. My bad guys, this is 23.4. My bad. So what is 23.3? We'll see, but first let's read 23.4. Deemed let out property. In case of more than 2 SOPs, the excess will be considered as deemed let out properties. Assessee can choose which one is to be considered as deemed let out, and the choice can change every year also, guys. In case of deemed let out, there is no actual rent and thus no adjustment for vacancy and unrealized rent. Thus only expected rent is considered. Municipality figures the standard. 24A and 24B shall be allowed similar to LOP, as deemed LOP is same like LOP except only thing there is no actual rent. Alright. So 23.1, 23.2 done, and now 23.3. Right? Can it happen that for part of the year it's let out and then you decide to stay in that house? Or can it be possible that part of the year it's self-occupied and then you decide to let it out? Yes. So guys, minus and plus, what does it become? Minus. Same way, LOP plus SOP or SOP plus SOP, LOP is nothing guys but LOP. It's the same calculation. So 23.3 LOP plus SOP or SOP plus LOP, doesn't matter which way you see it, it is the same as LOP. That means here also, will you have actual rent? Yes. But for the months you rented it out, let's say for 9 months you rented it out, so 9 months into 1 lakh will be 9 lakh. But for the 3 months that you were staying in it will be 0, yes, 0. So for 12 months it will be how much? 9 lakh. Then they will compare municipality figures the standard. Let's say 8 lakh, 10 lakh and 12 lakh. Which one will you take? 8 or 10, whichever is higher, subject to 12 lakh. So your ER will be 10 lakhs. Now can you minus unrealized rent? Yes, because you've let it out. So some part if not realized. Can you minus vacancy loss? Same concept. If AR is greater than ER, same concepts guys. And then finally whichever is more you will take as your GAV. Now please tell me, are you offering something to tax to the government? Yes. So will you get deduction of municipal tax, 24A, 24B, etc.? Is there any limit on interest? No limit on anything, because 2 reasons. First, whatever you pay as interest is the bank's income or someone else's income, so the government has no problem. So the only place where there is a limitation is SOP, because that's a benefit and the government cannot give a huge benefit to everyone in India. India is a huge population country. So that is section 23. The last part remains here guys. This is a building. A builder has constructed the building, sold all the flats except the last 5 floors. He's not selling the flats. You know what he's doing? He's secretly renting the flats and he's taking cash as rent, and he's not telling the income tax department. He's not even paying taxes on it. The government says something is fishy. So the government says, hey builder, listen, we will wait for 2 years. The year you constructed, let's say today you constructed it, so 21-22 is the year of construction. After that we will wait for 2 more years. But if you don't manage to sell these 5 floors, why 5 floors? Because the section is 23.5. If you don't manage to sell these, then we will wait for 2 years after construction, because it takes time to sell flats. But after that, if you don't let it out or you don't show us some income, we are going to deemed let it out. You already know the concept of deemed let out. Again I repeat, section 23.5 is not for you and me. It's only for real estate players. It's only for construction companies. The year of construction plus the year of completion of construction plus 2 more years they will wait. But in that case also, guys, in this period also, if the houses are not sold or not rented out, then it will be deemed let out property. And you know concept of deemed let out, there is no actual rent. Everything is based on expected rent and then all the calculations below. Guys, this is section 23.3. In case of LOP plus SOP, it's the same as LOP. 23.4 done, 23.5 done. Now a very interesting concept which is there in the exam. This is your house. This part is self-occupied, this part is let out. Not for part of the year or part of the year, the whole year or whatever it is together, but together you are renting it out also and staying in it. This happens in many tier 2 cities. I've stayed in something like this in Delhi. When I was in Delhi for 2 years, I stayed in a house where the owner used to stay and I also used to stay. So then what happens, you do two calculations. The easier one is SOP. Everything is nil except you minus 24B interest. Is there a capping, guys? Please tell me, for SOP is there a capping? Yes. Whatever interest you are paying, you will divide it and you will take a portion. So this is, guys, a portion of the house, and the shortcut for a portion is a portion. A portion of the house is let out, a portion of the house is SOP. What do you do? A portion, what do you do? Everything is divided. So if the interest for the entire house is 1 lakh and this is half the house, then you will get a deduction of 50,000. And in LOP, you will do AR, you will do ER. Whichever is higher will be your GAV. You will minus municipal taxes, but not of the entire house, only 50%. You will get NAV, you will get 24A, 24B, again you will do only for half of the house, yes, 50%. So basically you're going to apportion everything, yes, you apportion. Guys, anyone who has siblings, I have an elder sister, so we know exactly how to apportion it. Any chocolate is cut exactly in half, the pizza is cut exactly in half, you know what is apportion. So this is the same way, this is a same LOP, SOP, everything has to be cut in the same proportion. In the exam you have to check what proportion it is it exactly half, 1/3, etc. You have to decide. Alright, perfect, that is apportioned. Now section 25. Guys, we are done with 22, 23 and 24. 24 has two deductions, A and B, A for ad hoc, B for borrowing. Now 25, I'm going to tackle it here, section 25. They say that if you are going to pay some interest abroad, if this is the surgeon and he is going to pay some interest to his brother, this interest was used in India, and hence we will see in a chapter called deemed income, but you can understand it logically. Because this money was used in India for the house, it was accruing in India, earned in India, or deemed to accrue or rise in India, and hence this interest should be taxed in India, and hence the surgeon, while he is paying, he should deduct TDS. So the government tells him, listen surgeon, do one favor, whenever you are paying the brother, you should deduct TDS. He forgot to deduct TDS. If you forget to deduct TDS, if you don't do your job well, then they will not give you deduction of interest. They will also not do your job well if you don't do your job well. So this is section 25. Next is section 25A. A is arrears. Guys, remember, the Income Tax Act allows you a deduction for unrealized rent. If you fulfill 4 conditions, legally vacate our building, they can help you minus that 2 lakh rupees which did not come to you as unrealized rent. But finally, if that tenant, after a few years, even if you don't have the house, and he comes back to you saying that, listen, I'm sorry, I did not pay you the rent, here is the 2 lakhs or here is the 1 lakh or whatever it is, will you tax it now? Yes, this is like bad debt recovery. This is arrears of rent. Will you tax it? Yes. But had he paid it in that year, you would have got 30% deduction. So now also you will get a 30% deduction. So this is 25A, this is 25, and this is 25A, arrears of rent. Alright. We will now move on to the next part, that is 26. It's a very simple section, but we'll first read 25 and 25A from here. 25 is inadmissible deduction or disallowed. Are you paying interest to your brother? Yes. Have you ordered the pizza? Yes. Have you paid for the pizza? Yes, but you will not get the pizza. Disallowance is just that, guys. You pay, but you will not get a deduction. And 25A is arrears of rent, but you will get 30% deduction. Next, is section 26. Guys, I don't know if you're aware, but the surgeon got married at the age of 26. And now he has his wife, and his wife says, listen, you can't be owning the properties alone. We should be co-owning the properties. I hope you trust me enough. And he fell flat. He did not know what to say after that. So he started co-owning properties with his wife. Guys, this is the concept of co-ownership. And in co-ownership, when you own it with your wife or your parent or your sibling or your friend, whoever you co-own it, the calculations are just the same in case of LOP. So nothing changes in LOP. If the co-owned property is let out, you will do the same calculation, AR versus ER. You will do the same municipal tax. You will do the same 24A and B. And whatever final amount you get will be split between the co-owners in the proportion of their shareholding or their holding. So in LOP nothing changes. No guys, in LOP nothing changes. LOP is nothing changes, smile. But in SOP, if it's self-occupied and you've taken a loan on which you're paying interest, will the surgeon and the wife both get up to 2 lakh rupee benefit? Yes, because the benefit is per person, and hence in SOP straight away you will do two calculations. One is in the hands of the surgeon, everything is nil 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 and 24B deduction, and one is in the hands of the wife, everything is nil 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 and 24B deduction. So basically this is the idea behind co-ownership. LOP nothing changes, SOP this happens. So this is the idea behind the change. And guys, now over to the last section. So let's read co-ownership from the quick book. In case the co-owned property is let out, then compute normally and then apportion between the co-owners. And in case co-owned property is SOP, then co-owner gets individual deduction of 2 lakhs at 30,000 each. This could be used as tax planning if both take loans and pay EMI. And hence guys, once you get married, you and your wife, if they both take a loan together, then you get 2 lakh rupees loss. She also gets 2 lakh rupees loss, which is a great thing, because 4 lakh rupees, your salary or other incomes can be reduced by up to 4 lakhs together as a couple. Alright. And the last section is section 27. Perfect. Tax saving, absolutely right. Guys, section 27, just a minute. Perfect. Guys, in section 27, you have a house property and you are earning income. But guys, what if you are earning very high incomes? So you will be taxed at a high rate. You know, we are taxed on slab rates. So it's a very tempting offer for the surgeon to transfer his house property to his wife. If you transfer your house property to your wife, now who will earn the income? The wife. Now who will be taxed? The wife. And maybe her basic exemption limit is being unused, so she will not pay any tax. So you have fooled the government together. Yes. The government says, listen, we know what you are trying to do. This income, we don't care about the asset. The asset can be your wife's name, but this income will boomerang back to you and you will be taxed on it, because you will be considered the deemed owner. The wife may be the real owner now, but you are considered the deemed owner for this house property. Unless you and your wife are separating, or unless she has paid you adequate consideration, these are two exceptions. Otherwise guys, this is called deemed ownership, first case. Second, since this does not work, You as a surgeon are frustrated and you give it to your minor child. Your minor child also has a basic exemption limit, so you give your house property to your minor child, and now the minor child owns the house and pays the tax and fools the government together. So the government says, listen, we know what you're trying to do. So this will also boomerang back, not the ownership but the deemed ownership for taxing you on the income, unless it is a minor married daughter, which is a wrong thing actually, but still you have to understand it. Minor married daughter, as minor children are minor children everywhere in income tax except house property, where there is a concept of minor married daughter. In this case, clubbing will not happen. Or if the child is, let's say, a YouTuber and it's a very big YouTuber and he has or she has a lot of income and has paid you adequate consideration, then in those two cases clubbing will not happen. These are two situations. Very important, yes. The third, fourth, fifth, sixth are not very important. The third is, if you as a surgeon have sold a house or have bought a house from someone and you have paid the amount, you have taken possession, yes, so part performance is done, yes, but registration has not happened, so you cannot say I'm not the owner. If registration is a mere formality, even if that has not happened, this you will still be considered the owner. Yes, you are the deemed owner. Next, if you stay for more than 12 years in a tenanted property, you are not the owner of the property, you are a tenant, but you are staying in the house property for more than 12 years continuously, then you become the deemed owner. These tenancy rights, the person who holds tenancy rights is the deemed owner. Next, remember in GST, tenancy rights, if you sell, it is subject to supply of services. Anyway, not very important, more important is CA final. Next, if you are a surgeon and you own a huge plot of land, but only this much is habitable by you, the others are illegally occupied, then this is called an impartible estate. Impartible estate, if you own part of the estate also, you will be considered as the deemed owner of the entire estate. And last, if you have bought shares in a cooperative housing society, not because you wanted to buy shares but because the shares are linked to the house, then you will be the deemed owner of the house property. In all these cases, whether you transferred it to your spouse or to your minor children, or in any of these situations, who will be taxed? The surgeon will be taxed back. We don't care about who is the actual owner, we've called the surgeon as the deemed owner. Guys, I have a couple of questions for you now that you're understanding house property. This is section 27, done and dusted. I have given my house on rent with furniture. The house rent is 1 lakh and the furniture rent is 20,000. Please tell me, can I take the entire 1,20,000 in house property and can I take a 30% reduction? No, this will go to house property and this will go to IFOS. I have given a house property with a generator on rent, again the same amount, 1,20,000. Where will it go? Again 1 lakh in house property and generator in IFOS. And if there are any petrol expenses of generator, can I minus it in IFOS? Yes, you can always. This was an exam question, generator and house property. This kind of thing is called composite rent, where it comprises of either a service or a facility. But what if, guys, a house property with furniture is given and the breakup is not given, overall 3 lakh rupees, then where will it go? Then you cannot take it to IFHP because we don't want to give a 30% reduction on furniture. So hence this will go to IFOS, or if it's your business, then PGBP. Next, very few concepts remaining. Entire 3 lakhs, yes. If you can't break it up, guys, how will I break it up? Nandish, I'm just asking you a question. What will you guess? Will you dream about some number? No. How will you break up the number? There is no way of breaking up this number. So entire 3 lakh. But if it is a service and you know what is the cost of the service, then you can remove that part. But that's not so important. But only one thing I want to tell you guys, that you can take in house property only for house property, not for any facility, not for any furniture. Perfect. And guys, what if you're a tenant and you rent out your house, which is don't own? This is called subletting. You first rent a house and then you rent it out. This subletting is not house property because you're not the owner. Only IFHP will be taxed for whom? IFHP will be taxed only and only for the owner. These are the concepts here, guys. Although this head speaks about house property, it also includes all kinds of buildings and land appurtenant thereto, that is malls, offices, godowns, etc. Guys, what about you are renting out a plain piece of land? What if you are renting out a plain piece of land? Will that go under house property? No, because the government doesn't want to give you a 30% reduction on a plain piece of land, so this will go in IFOS. Assessee must be the owner of the house property. Assessee need not be the owner of the land, you just need to be the owner of the house property. Guys, any other deduction will you get in 24? After you get 24A 30% deduction, will you get any other deduction of fire insurance, house insurance? What if they say on the ground you have paid some rent? Nothing, guys. No other deduction will be allowed. So ground rent will not be allowed as a deduction, guys, because everything is covered in 24A. Alright. This is 23.5 for 2 years. Composite rent we've already seen. Income from house property situated abroad. Same concept, guys. Income from house property is also. Imagine the same concept, income from house property abroad also. And if renting becomes a business, then it will be taxable under PGBP. This is the chapter deemed ownership. This is the chapter, yes, very, very good. I have just a question for you. Please tell me the answer of this question. Guys, this is a building. The ground floor is used by me for PGBP. The first floor is used by me for my residence and the second floor is let out as LOP. Please tell me here, in SOP, what will be the values? And all of this is 1/3, 1/3, 1/3. What will be SOP value, guys? Everything will be nil. And can I take 24B deduction, guys? Please tell me, can I take 24B deduction? Yes. And if this entire interest is 3 lakhs, how much can I take in SOP? I can take 1 lakh. Great. So SOP done. Yes, SOP done. Maximum 2 lakh you can take. Now in LOP, guys, I have rented it out for 1 lakh rupees a month. What is my actual rent? 12 lakhs. And let's say they've not given you municipality figure standard. So 12 lakh. Can I minus municipal taxes here? The full thing, or will you apportion? Will you share the pizza? Only the apportionment. So let's say 90,000 is a municipal tax. You will get 30,000 minus. Then from the NAV, can I take 24A? Yes. And can I minus 24B? How much, guys? Again, only 1 lakh you can minus because you have to apportion. And what about PGBP, guys? Is using an office, when you use it for an office, can you consider it as SOP? Can I say I'm staying in my office? No. So this will go in PGBP. So here, can I minus municipal taxes from my business? Think about it. Yes, I can. Good answer, Abhi. Why? Because, guys, logical. What is the golden rule of business? The golden rule of business is any expense for business can be minus. Please tell me, are you paying 1/3 of the municipal tax for a business? Yes. So can I get 30,000 business deduction? Yes. What if you say that you have taken insurance of this entire building, guys, fire insurance, and you have paid 60,000 rupees fire insurance? Can I take fire insurance in SOP? No. Can I take fire insurance in LOP? No. But can I take it in PGBP 20,000? Yes. What if they say on this ground, on this building is on a ground and the ground rent is 30,000 rupees? Can I take 10,000 here LOP? No. SOP? No. But PGBP, can I take 10,000? Yes, I can. So only thing, my request, guys, in the exam, they can give you 3 floors or 30 floors, does not matter. As long as your concepts are clear, as long as you can break them up. Remember, for LOP, SOP, what are the 3 deductions? Please tell me in the chat box. For LOP, what are the 3 deductions? First, municipal tax. Second, 24A. And third, 24B. Anything else besides this, guys? Anything else? If they give you 15,000 things other than this, will you minus a deduction? No, don't get confused. In SOP, what is the thing you can minus, guys? In SOP, what is the only deduction you can minus? 24B. What if they give you 15,000 other things? Ignore them. And if you're using a business premise which is your own, can I minus everything as long as it has a link to the business? Yes, you can minus everything. Perfect. On this note, guys, we will take a 10-minute or a 5-minute break. We'll take a 5-minute break. We'll come back and we'll continue into IFHP sums. Thank you. 10 minutes? Okay, 10 minutes break and we'll continue into IFHP. Perfect. Guys, this is IFHP. Let's have a look at the questions from this chapter. Here we go. This is the first question. Let's try and see what are they asking us in this question. Mr. Raman is a co-owner of a house property along with his brother holding equal share in the property. So this is Raman and this is his brother. Both have 50% shareholding in a house property. Compute the income from house property chargeable in the hands of Raman. So we basically have to figure only 50% share, not the total share. Is this let out property or SOP? The rent is received. So this is a let out property, LOP. Guys, in LOP you don't have to do anything. You have to just calculate normally and split the profits. So please tell me, municipality figures the standard. Which one should I take? My ER is 1,60,000, 1.6 lakhs. And my AR is 15,000 into 12 is 1,80,000. So I will take 1,80,000. The loan for the construction of this property is jointly taken and the interest charged by the bank is 25,000, out of which 25,000 has been paid. Guys, interest whether paid or paid does not matter. Only municipal taxes on payment basis. So 25,000 will you get? Yes. Interest on unpaid interest is actually a mistake for you. So hence you don't get deduction for interest on interest. To repay this loan, Raman and his brother have taken a fresh loan. You will get multiple loan interest. Yes, guys, because no matter how much interest you pay, no problem. So on 5,000 again you will get yes. Municipal taxes of 5,000 have been paid by the tenant. So if tenant pays it, you will not get this deduction. So there is no unrealized rent. There is no vacancy loss. So your GAV is 1,80,000. Guys, let's do it on the calculator. From 1,80,000 there is no municipal tax. So that is your NAV. From that 30% will I minus, and then I will minus 30,000 as interest. So that gives me 96,000 as income from house property. Into 50% is 48,000 is Raman's share. So income from house property of Raman is 48,000. I hope this is clear. This is the computation of income of house property of Raman. Do the entire calculation and then split it. Next is question number 2. Mr. X owns one house property in Mumbai. The house is having two identical units. First unit is SOP and the other unit is rented out. Guys, is this a portion? Yes. So SOP and LOP. My favorite is SOP. I will start with SOP first. Everything is nil. Yes, everything is nil. Only one deduction, guys. What is the deduction? 24B, and that is maximum 2 lakh if 4 conditions are satisfied. So let's see the interest amount. The interest is not given here at all. Let's go to the next page. What is the interest on borrowed capital? The interest on borrowed capital is 1,500 per month. So 1,500 into 12, which will give you 18,000. And out of that, the house is only half, so only 9,000. I think that is about it. So only 9,000 deduction. In case of SOP, only 9,000 deduction. Yes. So my loss from house property is 9,000. Now for LOP, let's do all the calculation. Municipality figures the standard. Municipality and figure 1,90,000, 1,85,000. Which one can I take? 1,90,000. But the limit is only 1,62,000. So my ER is 1,62,000. My AR, the house is rented for 8,000 per month. 8,000 into 12 is only 96,000. So I will take 1,62,000 as my GAV. Yes. 1 lakh. Sorry. Why is the rented unit was vacant for 2 months? Can I minus vacancy loss? No, you can't minus because your AR is not greater than ER. I hope you remember that. So my GAV is 1,62,000. Next, guys, from this you can minus municipal tax. You can minus 24A and you can minus 24B, but no matter what they give you, I need only two things here. This I already know is 9,000 of interest, so I only need to know municipal taxes. Let's see what the municipal taxes are. The municipal taxes paid by X is 15% of municipal valuation. So what is the municipal valuation? 1,90,000 into 15%. But guys, this is of the entire house. Please remember to apportion the pizza. So 14,250 is what you will get. 14,250. So 1,62,000 minus 14,250 will give you 1,47,250 into 70% minus 9,000 will give you 94,425. Let's check. First guys, they've taken rented property. We are going to take SOP first. So for self-occupied unit, it's 9,000 loss. We also got the same thing, 9,000 loss. Now for LOP, why have they got a different number? Oh my bad guys. This is for the entire house. So you have to divide it by 2. 1,62,000 divided by 2 is 81,000. So our numbers will change slightly here. So this is of the entire house. So we'll get your ER expected rent is 81,000. Your AR is 8,000 into 12 is 96. Guys, AR is more. We can minus vacancy loss. Yes, how many vacancy loss guys? 2 months. So that is 16,000 I can minus. And once I minus, I ignore ER. So this is 80,000. Yes. So my GAV is 80,000. Yes. Minus municipal taxes. So I'm just writing 80,000 minus municipal taxes, which is 1,90,000 for the entire house into 15% divided by 2. That is 14,250. Which is 65,750 into 70% and minus 9,000 will give you 37,025. I hope everyone's okay with the calculation. I'm going a little fast on the calculation. You need to be also fast with the calculations. 37,025. Only three things you can minus. 9,000 you can minus, you already know that. 24A is 30%, you already know that. Only thing was municipal tax, which is 15% of the entire house, and then divide by 2, 14,250. Alright, so this is the second question. Third question guys. Vikas owns a house property where municipal value, fair rent and standard rent are these. During the year, 1/3 of the portion of the house was let out for residential purpose and the remaining 2/3 was self-occupied. So SOP is how much? 2/3 and LOP is how much? 1/3. First let's do SOP guys. What is the only deduction in SOP? Interest deduction 24B. Here guys, we'll have to find out the interest. The construction of the house began in June 2014 and was completed in 31st May 2017. So guys, please tell me which is the year, which is the financial year of completion. The financial year of completion is 17-18. That year is called the completion year or the current year. Before that, everything is pre-construction period. Vikas took a loan of 1 lakh on the 1st of July 2004 for construction of building. He paid interest on at 12% per annum and every month such interest was paid. So from 1st of July 2014 to 31st March 2017, we'll have to calculate interest, which is the PCP interest. So let's calculate for the year 14-15 for 9 months. So 1 lakh into 12% divided by 12 into 9 is 9,000. For 15-16 it is 12,000. For 16-17 it is again 12,000. That's it. Yes. So 12 plus 12 plus 9 totally is 33,000. Is this the PCP interest guys? Please tell me, is this the PCP interest? Yes. This divide by 5 is, you will get 6,600 for how many years? for 17-18, 18-19, 19-20, 20-21 and 21-20. So this is the last year we will get 6,600 more. Yes. So in this year, what is your interest? 6,600 of PCP. And what is the current year interest? 12,000. So total interest is 18,600. Now this interest of 18,600, guys, will I have to apportion between 2/3? Yes. So divide by 3 into 2 is 12,400. This is the loss from SOP, 12,400. I hope you understood, guys. What we did was only an interest calculation, otherwise this sum is easy. Now let's find out LOP. Municipal value and fair rent is 96 and 1,26,000 for the whole house, guys. So we'll have to apportion it into 1/3. So first let's take the whole house only. 96 of 1,26,000, which will you take? 1,26,000. But the standard rent is 1,08,000, so you will take 1,08,000. Divide by 3 is only 36,000. So your expected rent is 36,000. What is your actual rent? 5,000 a month. 5,000 into 12 is 60,000. So 60,000 is more. You will take this. 11. So now can you minus municipal taxes? Yes. 11% of municipal value. What is the municipal value? 96,000 into 11% is 10,560. But you will only minus 1/3 here. Divided by 3. That is 3,520. Very, very good sum, guys. And then you will get NAV. Yes. So 60,000 minus 3,520 is 56,480. Can I minus 24A here? Yes. Can I minus 24B here? 1/3. Yes. 18,600 was the total interest. Divided by 3, you will minus 6,200 here, and you will minus 30% here, and you will get your answer. As here is first SOP 12,400. Let's check the loss. SOP 12,400, which we also got. We also got 60,000. We also got 3,520. We also got this. We also would calculate this 30% and 6,200. So this is your income. This is your loss. You can set it off. Yes. And this is your final income from house property. Moving ahead to the fourth question. Rohini Ravi is a citizen of US, a resident and ordinary resident. So guys, if you're a resident and ordinary resident, the entire income, including the house in US, will be taxed in India. She owns a house in LA, which is used as a residence. The annual value of the house is $20,000. The value of $1 is 75. So 20,000 into 75, that is the annual value. That is a GAV. So do you have the GAV? Yes. 20,000 into 75, which is 15 lakhs. Can you minus municipal tax there also? Yes. Can you get NAV 24A and 24B there also? Yes. This is your SOP. Sorry, this looks like it's an, just one second. Okay. Now guys, they've not told us what is it, a SOP or LOP, but these are the details for the house in USA. Yes, she uses as a residence. Okay, my bad. So it's an SOP. So you will get only one deduction, that is 24B. This is SOP. She took ownership and possession of a flat in Chennai during the year, which is used for self-occupation while she is in India. So can this also be SOP? Yes. The flat was used by her for 7 months only during the year 31 March 2022. The municipal valuation is this. The fair rent is this. She paid the following to the Corporation of Chennai. This is the municipal tax. So guys, again, this is SOP. Yes, this is SOP 2. It's so simple. All you need to do is for this also calculate interest, and for this also calculate interest. Sorry. It's a very simple question. For USA house also, it's used by her as a residence, and even the Chennai house is used by her as a residence. So it's a very simple question actually. In both SOP 1 and SOP 2, all you have to do is 24B and 24B. And next, she has a house property in Bangalore, or she had a house property in Bangalore, which was sold in March 2018, in respect of which she received arrears of rent 60,000. As what to do with arrears? it is taxable after giving a 30% deduction. So let's calculate 60,000 into 70%. 42,000 is definitely taxable. I'm putting it in a box, 42,000. For the US house, guys, can you take US house as SOP? Yes. Is there any interest on the US house? No interest on the US house. So what is the value? 0. I'm putting that in a box. So now the only thing in this complicated sum is the Chennai house SOP, which is you have to calculate the interest. Let's see the interest, guys. Is this municipal tax important, guys? No. Is this municipal value and all important? No. Alright. Now interest, guys. She had taken a loan from Standard Chartered Bank in June 2019 for purchasing this flat. Interest on the loan was as under. Guys, prior period is 49,200 and current year, will you take the whole year, guys? Current year, she bought the house in the current year. Yes, so interest is two parts. Current year, what is the current year interest? 50,800 plus 131,300 is 1,82,100. This is the current year. And what is PCP? 49,200 is the PCP. Will you get 1/5 of that? Yes, 49,200 divided by 5 is 9840 and 1,82,100. This is the total interest. Can you take 1,82,100 plus 9840? Can you take 1,91,940 as the reduction? Yes, you can, because up to 2 lakh rupees. Just ensure certify 5 accounts for 99 is fulfilled. After 99 the loan is taken. Yes, the loan was taken in June 2019. For acquisition, yes, or construction should be in 5 years, but this is not constructed, and certificate is assumed will be taken, so you can minus this. Yes, so one loss, this is a loss and this is a profit. This is her income from house property. Alright, she possesses a house in LA. The value is nil, guys. We've also taken nil as the value of LA house. We've also got 42,000 as the house which is areas of rent in Bangalore, and we've got this same answer here, guys. Interest on borrowed capital 1,91,940. So this is the answer. This is the question. How many more questions? Let's check. 5th question, and that's it. Yes. Let's do the 5th question, guys. Two brothers, Arun and Bimal, are co-owners. Guys, why don't you read this question first before we discuss, please? Alright, guys, just taking you through this sum. Very interesting sum. Two brothers, Arun and Bimal, are co-owners of a house property with equal share. The property was constructed in the year 1980, 1999, 88, 1998, 99. The property will consist of 8 identical units. Guys, co-ownership means SOP we'll have to split, and LOP no problem. Alright. Guys, if someone, I think Abhi, you've raised your hand, just give me 5 minutes and then I will open up for any questions. During the year 21-22, each co-owner, guys, they have 8 identical units. I told you whether it's 8 or 800 units doesn't matter. The pattern is still the same. During the financial year, each co-owner occupied 1 unit for residence, and the balance 6 units were let out at a rent of 12,000 per month per unit. Guys, during the year, each co-owner occupied 1 unit for residence. So basically there is SOP 1, SOP 2, and the LOP is 6 units are LOP. This is 6 units. And the balance 6 units were rent out at 12,000 per month per unit. So 6 units were rent out. So you have AR and you have ER, same concept, only thing you have to multiply by 6. The AR is 12,000 per month. The municipal value of the house property is 9 lakh. So municipality figures the standard. Municipal value is 9 lakh for the entire house, but we want divide by 8 into 6. So 6,75,000 for this 6 flats. Municipal taxes are 20% of municipal value which were paid during the year. So what is the municipal value? 9 lakh into municipal taxes at 20%. This is 1 lakh 80, and that also you have to split, divide by 8 into 6, which is 1 lakh 35 here. That is the municipal tax. I'm just parking it. Municipal taxes are 1 lakh 35,000 which are paid. In SOP anyways we don't get municipal taxes. Alright, moving ahead. The other expenses were as follows, guys. Will you focus on other expenses like repairs, insurance, etc.? No, because you have 24A. They are only given to confuse you. Interest payable on loan taken for construction of the house is 3 lakh. Again, 3 lakh divided by 8 into 6. So for LOP, how much is it? 2 lakh 25,000. So interest, I'm just parking it here. Interest is 2 lakh 25,000. So 3 lakh divided by 8, 37,500 is the interest here, and 37,500 is the interest here. But guys, please tell me here in case of SOP, because the property was constructed in 1998-99 and the loan was taken for construction, will you get 2 lakh or will you get 30,000 limit in case of SOP 1 and SOP 2? 30,000. So I'm cancelling this to 30,000. And I'm cancelling this also to 30,000. Have you got your answers for SOP 1 and 2? Yes, 30,000 loss. So now the only thing is basically you have to calculate LOP for the 6 properties. So let's do. One of the let out units remained vacant for 4 months during the year. So there is a vacancy loss of 4 months during the year. We'll see there is vacancy loss. And Arun could not occupy his unit for 6 months as he was transferred to Chennai. He does not own any other house. That is still SOP, no problem. The other incomes of Arun and Bimal are 2 lakh 90, 1 lakh 80. We don't care right now other incomes. So we are just going to calculate income from house property. So guys, first one SOP is done. Next SOP is also done. Now this 12,000 per month into 12 months into 6 units. Guys, can you calculate? 12,000 into 12 into 6 units is 8,64,000. Whereas municipal value, they have not given fair rent, they have not given standard rent. So what is this? 6,75,000. Guys, is there any unrealized rent? No. Now, is the AR greater than ER? Yes. Can I minus the vacancy loss? Yes. But what is the vacancy loss? One unit was empty for 4 months. So 12,000 into 4 is 48,000. Can I minus that? Yes. So 8,64,000 minus 48,000. So my GAV is 8,16,000. Let's check the GAV. 30,000, 30,000. We've also got this answer. Now 8,16,000 is also our GAV. Perfect. Let's continue. We are on the right track. From your GAV 8,16,000, can we minus municipal taxes 1,35,000? Yes. How did we get the municipal taxes? First we took the municipal value, 20% of that, and then divide by 8 into 6. So minus 1,35,000 is 6,81,000. Guys, can I take 30% of this? Yes, into 70%. And interest is 2,25,000. So that gives me 2,51,700. And this will be split between the two co-owners. 2,51,700 split between the two co-owners. So here it is, guys. Loss and income, which is giving you income from house property of this amount. Watch out. Let me know if there is any question on this, guys. Watch out the screen and tell me know any questions. Otherwise, we're done with a chapter called income from house property. Any questions right now is a great time to ask. Thank you. Perfect, guys. Looks like we are done with this chapter completely. Now let's go to the next chapter. Here we are. This was income from house property. Now let's go to rates of tax again. Since every chapter we are going to rates of tax, let's do one more rates of tax. Okay. Guys, next we are still at individuals. Now we are looking at surcharge. So we are done with basic tax. We are done with rebate. Now let's look at surcharge. For individuals, the surcharge is as under. You have to see total income. If the total income is greater than 50 lakhs, not exactly but greater than 50 lakh, the surcharge is a tax on the tax. So whatever your tax is, you will add 10% as surcharge. So this is not a tax on your income, it's a tax on your tax. If it's more than 1 crore, then the surcharge is at the rate of 15%. If it's more than 2 crore, it's a very dangerous surcharge of 25%. And if it is more than 5 crores, very few people in India have an income of more than 5 crore, hence the surcharge is 37%. So if you have so much income, then it's better to start a company because the company surcharges are much lower. So this is the surcharge. So there is basic tax. Then of course there is rebate, but rebate is only for total income. So rebate is for people who have lower income, surcharge is for people who have higher income. And then there is HEC, which is my favorite because HEC doesn't change no matter who you are. It is 4% of your basic tax plus your surcharge. So that is your HEC. Guys, we're done with some more rates of tax. Now let's move ahead to the next chapter, which is agriculture income. What should be the limit for cess? There is no limit for cess. 4% is the cess. If there is any tax you pay, then on that you will have to pay cess. Alright. Nandish, is almost as good as if you don't go on the highway, will you pay a toll? No. Only when you go on the highway will you pay a toll. Same way, only when you pay tax will you pay a cess. Cess is on the tax. Alright. Perfect. Guys, agriculture income is next. Let's see what this is. Very, very interesting and very easy chapter. Agriculture income. Guys, the surgeon in his pastime, he had an agriculture land and he had a farmhouse also. This is a farm building, sorry. This is the farm building where he would stay and where he would keep his agricultural produce. And this was a rural agriculture land. This was in a rural area. Yes, you know what is a rural area? Rural area is far away from an urban area. Just one second. Perfect. He used to grow things here and then he would supply it. Basically it was agriculture, yes. And he was told that under section 10, which is exemption section, the first thing is agriculture income and the following will be agriculture income. So what are agriculture income? Here, when you grow and sell agricultural produce, including grains, fruits, vegetables, etc. When you rent your agri land, that is also agriculture income, but it should be for agricultural purposes. When you grow flowers and creepers, or you go seedlings and saplings, all of that is also agriculture income. But guys, the following will not be. So what are taxable? Anything which is other than agriculture, like dairy, like horticulture, like animal husbandry, all that is taxable. In GST they could give a benefit, guys. Income tax people could not give a benefit for all of this. So if there is dairy, agriculture, animal husbandry, all of that will be taxable. So agriculture income is this. Yes, this is agriculture income. Now what if I sell this rural agriculture land? If you sell the rural agriculture land, again it is not agriculture income, and that's why I put a bracket here. but it will still not be taxable. We will see, because it's not a capital asset, rural agriculture land. And by the way, sorry, I want to add one more here. Income from the farm building. If you have the farm building, which you can see, if you give it out on rent to others, then income from that farm building is also agriculture income. So all this will be exempt. Yes, all this will be exempt. Rural agriculture land, if you sell, it is not taxable. It's not exempt, it is not taxable. What's the difference? One is comes under 10(1) and the other is not taxable because it is not an asset. Okay. So he's a very happy man, the surgeon, because he's earned this year, he's earned 9 lakhs from agriculture income. Guys, please tell me, will this 9 lakhs of agriculture income, will it be taxed? No, there will be no tax on this 9 lakh of agriculture income. So he's very happy because he's made money and he doesn't have to pay any taxes. Now what happens when this land is suddenly in an urban area, guys? So this is urban agriculture land, same building, but now it is urban agriculture land. Urban means it's an urban area. How is it? What is rural? What is urban? We'll see soon. But what if this is urban agriculture land? Then it's the same as rural agriculture land, except 2 things change. What are the 2 things? One is, in this case, if you income from your farm building, this building, whether you store grains or whether you store people here or whether you make a hotel of this, doesn't matter, we will tax it. Yes, this becomes taxable because now this is an urban area. In urban area, you know, space is always a problem. And second, this sale of urban agriculture land, this is a very precious land now because in urban area, so hence this is taxable. So what is the difference between rural agriculture land and urban? 2 differences only. Income from farm building is taxable and sale of urban agriculture land is taxable. These are the only 2 differences between urban and rural agriculture land. Alright. Now how does a land become urban or rural? First we will discuss what is urban. Everything beyond that is rural. Guys, if you know the boundaries of India, everything outside India, is it abroad? Please tell me. If you know the boundary of India, everything outside India, is it abroad? Yes. Same way we'll understand the boundary of urban. Everything outside urban is rural. So here it is. If there is a city with a population of more than 10 lakhs, then up to 8 kilometers, it will be considered urban. So this is the boundary. All this is urban, yes. If the population is more than 1 lakh, but up to 10 lakhs, that means it's a slightly smaller town, then up to 6 kilometers is the boundary, yes. And this 6 kilometers, this distance is aerial distance. This is not Google Map distance, guys. This is aerial distance. Just 1 second. This is aerial distance. 1 second, guys. Alright. So if this land is more than, if this town has a population of more than 10 lakhs, then up to 8 kilometers is urban. If this population is more than 1 lakh but up to 10 lakhs, then up to 6 kilometers. Guys, imagine you are staying in Mumbai, then up to 8 kilometers is urban. If you are staying in a smaller town, up to 6 kilometers. If it's more than 10,000 population and up to 1 lakh, then 2 kilometers, excellent. And if it's a small, very small place, but it's still called a town, that is up to 10,000, then only the municipal limits. This is the urban area. So guys, just repeat with me. More than 10 lakh means, is this the biggest cities of Bombay, of India? Sorry. Yes. Up to 8 kilometers. What if a land is here? Urban. What if a land is here? Urban. What if a land is on that border? Also urban. Imagine the boundaries of India. If it's a smaller town, then 6 kilometers, a smaller town 2 kilometers, and the smallest town only the municipal areas, only the municipal limit. And guys, all this limit is aerial distance, and all this population is the last population. Don't worry, this is not important from your exam perspective. Perfect. Next. Guys, what if you have agriculture income? Will it be taxed? No. So the surgeon has agriculture income of 9 lakhs and he has taxable income of 3 lakhs. He is very happy that he does not have to pay tax on 9 lakhs, but suddenly the surgeon is told about a scheme of partial integration or a scam of partial integration. I call it the scam. Some people would call it the scheme. This is a scheme or scam of partial integration. In this scheme or scam, there are 3 steps. Watch out for the 3 steps. First step is where they will shock you. So they will take all your incomes, 9 lakhs plus 3 lakhs, that is 12 lakhs, and they will calculate your income tax on this 12 lakhs. Yes, let's calculate, guys. Up to 10 lakh will be 112,500. From 10 to 12, 2 lakh, 10 to 12, 2 lakh into 30% plus 112,500 is 172,500 into 104% is 179,400. So the tax on this, guys, is 179,400. But why are they calculating this? I don't want to pay tax on agriculture income. They said, no, don't worry. In step 2, this first step I call as a shocking step, where they tax your entire income, including cess, excluding cess does not matter, guys. Next, it will be the same thing. Next, they will take this agriculture income and they will take their basic exemption limit, and they will soothe you. They will say that on these 2 amounts, that is 11,50,000, we will not tax you. That means you can minus this. So on 11,50,000, that is 1,50,000 into 30% plus 112,500, 157,500 into 104%, which is 163,800. So you don't have to pay tax on this much. So you have to only pay tax on 15,600 rupees tax you have to pay. So this is the only tax you have to pay. So please tell me, guys, step 1, did they shock you by taxing all your income? Yes. And step 2, did they calm you down by taxing, by finding out or reducing the tax on agriculture income and basic exemption limit? Yes. But guys, what you've not realized is, on a total income of 3 lakhs, you would hardly pay any tax. In fact, ignoring rebate right now, you would pay a tax only of 50,000 into 5% into 104%, that is 2,600 rupees only. But are you paying slightly higher tax? Yes. This is the scam of partial integration. I'll repeat one last time. Guys, doesn't matter whether it's including cess or excluding, because you're minusing cess from both, so does not matter. Guys, over to this again. Focus on the main concept, guys. Don't get lost in the trees. Focus on the forest. Look at the bigger picture. When is this scheme of partial integration applicable? Let's see that. It is applicable first only if you are an individual or anyone who has a basic exemption limit. That means you are an individual or an HUF or a AJP or a AOP or a BOI. Only if you are one of these, means these are people who enjoy a basic exemption limit. So only if you are a person who enjoys a basic exemption limit, that is the first condition. Yes, who all enjoy a basic exemption limit? Individuals, HUF, AOP, BOI and AJPs. And second, your agriculture income should be greater than 5,000 in that year, net agriculture income after minusing expenses, and your taxable income should be more than your basic exemption limit. These are your conditions. Yes. So please tell me here, is the surgeon an individual, HUF, AOP, BOI and AJP? Yes. And is his agriculture income greater than 5,000 and taxable income greater than basic exemption limit? Agriculture income 9 lakh and taxable income? Yes. So will he be subject to the scheme of partial integration? Yes. In the exam they will not tell you this, they will put it in a very silent manner, this scheme, guys. How they will put it, they will give you a person which is agriculture income, and you will exempt it very happily because agriculture income is exempt in India. Agriculture income from India is exempt, but you will not realize that this is what you need to tackle: scheme of partial integration. And the last thing that you need to study in this chapter, I'm going to the next page. Guys, there are some businesses which have a mix of both business and agriculture. Example, tea business. You grow tea leaves, that's agriculture. You make powder, that is business. So these businesses have to be split between business income, which is taxable, and agriculture income, which is exempt. So government calls these, or income tax calls these incomes, composite incomes. Composite means it has a combination of both. So this is composite income. There are 4 such businesses. Please be very careful. This is important from your exam perspective. First is tea business. In India, we consume about 8 cups of tea every day. So Rule 8 says that 40% of this will be taxable and 60% will be exempt. What you can do is, don't remember this, only remember this percentage. The moment you start thinking of 60 in the exam, it will confuse you. So in tea business, how much is taxable? Only 40%. In coffee business, which is Rule 7B, 7 cups made by a barista, the person who makes coffee is called a barista. In that case also, 40% is business income. I am not focusing on agriculture income, so should you not focus there. But if this coffee is the one which is grounded, roasted, flavored, etc., but if the coffee is just grown and cured, nothing else, then again Rule 7B says, but the percentage reduces because the amount of activity also has reduced to 25%. So coffee has 2 percentages, 40 and 25. In case of rubber business, guys, rubber also grows on a tree and then you make rubber. In that case, there is Rule 7A, and that is 35%. And last final amount, guys, here, if you have agriculture income, let's say you're growing potatoes, and here you also have a business where you are making French fries or you're making chips, then in that case, your agriculture income you want to show high because there is no tax. Your business income you want to show low because there is tax. So you will transfer the potatoes at a price which is very inflated. Why will you transfer it at inflated price? Because the higher the price, the more agriculture will make money and the less business will make money. But the government says this is not right. When you transfer such potatoes, it should be at market value. Market value means the price should reflect the market value. And if you don't know the market value, then it should be cost plus a fair amount of profit. As this is the pen. If I know the market value, great. If I don't know the market value, then it is cost plus the profit. This is Rule 7. Repeating, what are we discussing? We're discussing composite income. This will again come in PGBP. Composite income has mixture of business income and agriculture income. Don't focus on agriculture, focus on business because that is taxable. So in this case, tea business, Rule 8, 40%. Coffee business, 7B, 40 and 25. 40 is when it's grown, cured, roasted, grounded, flavored, etc. Here it is only grown and cured. 7A is 35%, and Rule 7 says that it should be transferred at market value. There is no value, they say market value, and if the market value is not known, at least you know the cost plus profit. Perfect, guys. This is agriculture income. Just taking you through the book, quick book as well. The surgeon has an agricultural land just outside Mumbai, purchased for 1 lakh. Good that we are looking at this because as he purchased this land for 1 lakh. The farm building next to it, where the farmer stays and stores the agricultural produce, he is shocked by a scam of partial integration. Surgeon also has non-agriculture income, that is from his clinic, business, shares, etc. more than basic exemption limit. He also starts growing tea leaves and manufacturing tea powder. 10.1 is agriculture income. Income from cultivation. but it should be in India, guys. If the agriculture land is in Bhutan, Nepal, Pakistan, taxable. Rent from land situated in India. Basic operation versus subsequent operations. Good, guys. Guys, if I'm growing potatoes, is that agriculture income? Yes. If I put them in gunny bags, is that agriculture income? Yes. But if I put them in retail bags to be sold in the market, primary market, that is not agriculture income. Income from seedlings, saplings, also flowers and creepers is agriculture income. Income from farm building is also agriculture income. Sale of rural agricultural land is not taxable, although the same is not treated as agriculture income because that is not an asset. Only we'll see it in capital gain. Urban agriculture land, guys, there are only two differences. Sale of urban agriculture land is taxable, and income from farm building also is taxable. Urban area is here up to 10,000, 4 areas. That area 2 kilometers, 6 kilometers, 8 kilometers. The following are not agriculture income. Income from breeding of livestock, income from poultry farming, fisheries, dairy. Guys, remember in GST they have a very generous, G is for GST, G is very generous. They exempt all of it, dairy, farming, poultry, etc. everything. But in income tax they only and only exempt agriculture. Next, scheme of partial integration applies only to individuals, HUFs, AOP, BOI, AGPs, that is those persons chargeable to tax on slab rates having a basic exemption limit. Second, you should have agriculture income greater than 5,000 and non-agriculture income, that is taxable income greater than basic exemption limit. Step 1, step 2, and then step 1 minus step 2. Next, composite income, T rule 8, coffee rule 7b, rubber 7a, and rule 7, potato chips example, transfer at market value or cost plus profit. And congratulations, we're done with another chapter. Guys, this chapter does not have a standalone, ICAI does not categorize it as a separate chapter, but I wanted to categorize this as a separate chapter, and hence we've discussed it separately. After about 5 minutes, we'll come back and we will continue and we will discuss a very, very important concept called exempt incomes, which are very, very happy. Why are they so happy? Because, guys, there is no tax on them. It's almost like you giving your exam and there is no result. You earn income and there is no tax, just like agriculture income. We'll do it in 5 minutes. We will complete this, and then in the next session we will do residential status scope income including deemed income, and we will do IFOS and PGBP. Let's see how much of that we can finish today. Alright, so 5 minutes of break, come back and let's continue. Thank you. Alright, we are back. Guys, this is the last chapter that we are doing before the break, and then we go into a nice break. So this is exempt income, a chapter that is not asked directly, but in your other income, they quietly slide these incomes which you are expected to know. Let's do exempt incomes, but before that, let me introduce you to exempt incomes. Guys, exempt incomes, as the name suggests, are exempt from tax. But what you also should know is they are excluded from the calculation. So whenever you're calculating your tax or you're calculating your income, E for exempt, E for excluded. So they have to be excluded. Example, agriculture income is not considered in your calculation. In that, the first thing they excluded, the 10.1, is agriculture income. Guys, this has shortcuts in linked to the surgeon's life. Let me, as and when I go to those sections, I will tell you the shortcuts. The 10.1 is agriculture income. The first thing they gave exemption was to agriculture. We just finished that. 10.2, the second thing was HUF. When a HUF has already paid taxes, why should the members pay tax again on their share of income? So share of income of the members is exempt under 10.2. So first thing was agriculture, second thing was HUF. Similar to HUF, 10.2a, which is similar section also, is partnership firm's share of profit of the partners. If the partnership firm has paid the taxes, why should the share of profit be taxed again? So share of profit is not taxed again. But remember, guys, while the share of income of members is not taxable for an HUF, while the share of profit is not taxable for a partnership firm, for a company, when the company has paid tax, and you as a shareholder get dividend, will you be not be taxed? No. In that case you are taxed still, because the company is a separate legal entity. Next guys, when non-resident Indians, not you, not me, people who stay abroad, non-resident Indians, when they park their money in NRE account, they get 4.2% rate of interest. Why 4.2? Because section is 1042. On this NRE account, whatever interest they get is exempt. This is exempt, this is exempt, and this is exempt. When the NRI comes back to India and still continues to keep that money in NRE account, as long as it's come from abroad and it's placed in the NRE account, you will get interest which is exempted, which is a great thing. That is 1042. Next is 1062. In India, there is an embassy. If you remember, in GST we had 11 embassies. In those embassies, there is a French embassy. Basically, for France, they have an embassy in India where 62 employees work. Now, we have an arrangement with them whereby we have told the embassies abroad, the countries abroad, that listen, when our people are in your country, in our embassies abroad, we will tax them. Example, if this is India and this is France or abroad, India has an embassy abroad and France has an embassy in India. So both have people in each other's country. So India said, listen, I will tax my people, you can tax your people. That is a reciprocal arrangement. Again guys, give and take. I will tax my people and you can tax your people, and this arrangement is given an exemption. So we have to give them an exemption. So 1062 is basically an exemption we give to the people who work in India by the foreign government. But this condition guys, there's a condition, these people have to be foreign citizens. Please remember, this have to be foreign citizens. So this is I tax my people, you tax your people. That is 1062. Next, 1010 BC. There is a big catastrophe. BC is big catastrophe. And there is a big catastrophe means a big flood, earthquake, etc. has happened, and because of that big catastrophe you are paying some money. The government is giving money to the flood victims. In this case, in case of big catastrophes, this is an exemption. Yes, the money received in case of floods, etc., that is exempted. Yes. Just one second. Perfect. Next is very, very important, for which I am going to the next page, but I am still reading from here. 10.2 is for HUF. 10.2A is for partnership firm. 10.4.2 is NRE account. 10.6.2 are the embassy people. We tax our people, you tax your people. 10.6.6 is not very important from your exam perspective. It will come at CA finally. Now 10.10 BC also is something that we have done. Now let's move ahead. Is very, very important. 10.10 D. D is death, amount received on life insurance. When you get some money from the life insurance and you get it on the death of a person, the government feels very bad and the government says this will be exempt. On life insurance, similarly, when you get amount other than that but the premiums are low, every year the premiums are low. How low? I will tell you. Then also it is exempt. So on death, if you get, it is exempt, and the premiums are low and you get the money back, it is exempt. So these two, so it is taxable only when the premiums are high. So taxable we'll see ahead in a chapter called TDS, but right now we're talking about exempt income. So these two are exempt under section 1010D. But what is low premium? For you and me, if the policy has been bought on or before 1st of April 2012, if the policy has been bought before 2012, 1/4/2012, then if the policy is, let's say, for 10 lakh rupees, sum assured, then the premium can be maximum 20%. Every year, yes. So if the policy is bought, let's say in 2008, is it bought before 2012? Yes. Then every year, whatever premium you pay should not be more than 20%. If you pay more than 20%, it will become taxable, even if one of the premiums is more. And on or after 1st of April 2012, they reduce this to 10%. So if you buy a policy today, what is the low premium? Low means up to 10%. For handicapped people, this ratio changed, guys. There are two benefits for handicapped people. First, it changed on the 1st of April 2013. So if a policy for handicapped people, this is for handicapped people, this is for regular. For handicapped people, unfortunately, if you've taken a policy before 2013, then 20% same like us. But after 1st of April 2013 on or after, then this is still 15%. So that's a better amount for them. So this is what is low premium. Up to these amounts is low premium. What if you pay more than that? Then even if one of the premiums is more than that, then when you receive the money, it will be taxable. Otherwise, it will be exempt. So this is 1010D. Next, guys, if you have a girl child, make sure you contributing 11 rupees, 111 rupee, whatever is the amount into Sukanya Samriddhi account, because when your girl child gets the money back from the Sukanya Samriddhi account, it is exempt under 1011A. 1011A is the amount that is received from Sukanya Samriddhi amount, Sukanya Samriddhi scheme, not paying in that scheme, guys. When you pay, it's a deduction under 80C, but this is receiving from the Sukanya Samriddhi. When you receive from Sukanya Samriddhi, it is exempt under 1011A. How do you remember? 11 rupees in an envelope which you put in Sukanya Samriddhi account. Next is very important. Pay close attention. Guys, for retirement, we have various funds like the Provident Fund, like a pension fund, like different funds, but the government wanted one fund where everyone could contribute. So they all met at CCD, all the government officials, and they created a fund which is called the National Pension Scheme. In this National Pension Scheme, can I as a self-employed person contribute? Yes. Can you as a student contribute? Yes. Can someone who is an employee contribute? Yes. Everyone can contribute in this fund. And this fund should be kept till retirement. You should not withdraw the money before retirement. So who contributes to this fund? You can contribute. Your employer can contribute to this fund. Everyone can contribute to this fund. But they say you should not withdraw it in between. You should withdraw it after. So this is withdrawal, and remember at CCD the coffee is for 12 rupees. So the section is 10-12 after and 10-12 between. If in between you withdraw, let's say you needed money, you wanted to buy a new bike, or let's say some urgent emergency happened and you withdrew money, then whatever you withdraw, let's say you withdraw 5 lakh rupees, it will be taxable, but there will be an exemption only up to 25% of what you have contributed. So let's say you have contributed 1 lakh, so 25% of that, that is only 25,000 can be minused as an exemption, and the remaining will be taxed. Yes, the balance will be taxed. Why is only 25% given of your contribution? Because you have removed it in between. That was never the agenda of a retirement fund. But if you withdraw it after, A is after, they get happy, and on that withdrawal, they will give you whatever is the total amount, whatever is your withdrawing, on that 60% they will give you an exemption. So this is 60%. After you get 60%, and in between you get 25%. Guys, these are exemptions. If you're not understanding this, what you could do is watch the recorded one slightly slower. But remember, with the quick book, you should be able to understand this without any issue. This is because it's a fast track course. I have to keep this pace slightly faster. In 2A, we have to close account. In 2A, generally you are basically transferring money into some other account, or you are finally withdrawing because you've retired. Yes, we have to close the account. So whatever you are withdrawing, 60% of that, and in 2B, by this, anyways, this is more important from CA final perspective. But remember, in 2B, 25% of your contribution, and in 12A, after 60% of the total amount withdrawn. Just 1 second. Perfect. Guys, just 1 second, I'll be back. Alright, moving ahead. Guys, this is 1011A, so Kanya Samriddhi, this is 1012A after, this is 1012B in between. Now guys, the next one. Guys, normally no one goes to the post office to open bank accounts. Guys, you can actually go to a post office to open a saving account. Lots of people do go, it's a very good thing. So that more people come there, they've offered 15% rate of interest. I'm just kidding, only the section is 1015. But if you open a post office saving account and you earn interest, then up to 3,500 per annum will be exempt. So if you earn interest of 10,000, you will be only taxed on 6,500. This is for single holder. And if you're a joint holder, if you and your parents hold it together, then it is 7,000 per annum for all the joint holders together. That will be the exemption. This is a very interesting exemption in case of interest. This is 1015, 15% rate of interest. Guys, the surgeon was a very brilliant student. So at 16 years, he got some scholarships. So if you get some scholarships from approved sources, then it will be exempt. Guys, here we will see in deemed income that many people get allowances. The Indian employee who is working abroad in France, he also gets allowances. We will see in deemed income. But before that, guys, MPs, MLAs, a member of panchayats, these are very important people. They need a lot of allowances for their cars, for their security, etc. So they get 17 allowances, and those 17 allowances are exempt because the shortcut is 1017, 17 allowances to MPs, MLAs, etc. Next, if you get any award, the scientist, if you remember, the surgeon has a painless syringe. He discovered that at the age of 17 and he got some award. If you get some award like literary, scientific work, etc., then it is exempt. So 1016 scholarship, 17 he got an award, 1017 is MPs, MLAs also. 17A is award. Next 18. If you're a gallantry award winner, guys, gallantry award winner means you're some bravery award winner. And if your family is getting some pension, then that will be exempt because they don't want to tax those people. Gallantry award people getting pension. And unfortunately, at 19 years, people lose their life on the border, guys. Right now, in Ukraine and Russia, a lot of people unfortunately are losing their lives. Same thing happens on Indian borders also. At the age of 19, people lose their lives. And in that case, if your family gets some pension, if you are mated on duty, then in that case, that will also be exempt. So that is 18 and 19, both have a bravery angle to it. 1026 above. Whenever you get time for a holiday, or whenever the surgeon used to get time for a holiday, he used to go to Sikkim and spend 26 days, because 26 he used to like going above. For Sikkimese individuals, any income they have within Sikkim is exempt, plus any interest and dividend income from anywhere in India is also exempt. So these are two incomes for Sikkimese individuals, but if you marry a Sikkimese individual for this exemption, you don't get this. Next, guys, is 1032, very small exemption. Guys, if you have a minor child and his or her income is being clubbed in your income, this we will see ahead in clubbing of income, you get an exemption under 1032 of very small amount of 1500 per child. Example, if your child has some FD and his interest income from the FD is 50,000 rupees and is being added to your income, then it will be added, only 48,000 will be added, because 1500 will be an exemption under 1032. This is per child whose income gets clubbed. You will get an exemption of 1500 per child whose income gets clubbed. No limit to the number of children because it's a very small exemption. Next was a very happy exemption which got removed, which was 1034, where if you earn dividend, it used to be exempt earlier, but no more, now it is taxable. Investors were very sad when 1034 went out, because now dividend is taxable. Yes, in IFOS, we'll see in IFOS chapter. But guys, while dividend is taxable, the companies promise, don't worry, don't get sad, someday we will make up for it. So in 1034A, they say that whenever a buyback is happening, this is Reliance Industries, and they are buying back their share which is worth 2000 rupees. This is an investor, and they are buying it at 2500, so the investor will sell it to Reliance and the investor will make 500, but on that buyback Reliance will pay the tax. This is 1034A. Remember, 1034 is removed, but 1034A is there. So in case of a buyback by an Indian company, the Indian company will pay the tax on it. So that is a quid pro quo for removing 1034. Next is 1037, very interesting one, guys. Please pay attention. Guys, this is your agriculture land. If this is rural agriculture land and you sell it, there is no tax on it, because you will see ahead in capital gain chapter that rural agriculture land is not asset only, and if there is no asset, there is no capital gain. But if instead of this is urban agriculture land, and if urban agriculture land is sold, you know there is tax on it. And if it is compulsory acquired, guys, any asset is compulsory acquired. Example, you have a beautiful house in Bangalore and there's a metro which is going to go over it, so the government acquires your house compulsorily. Compulsory doesn't mean that like Hitler they will throw you out, or like Putin right now they will throw you out. No, they will give you compensation, so this is also taxable. But when both of them come together, that means if it's urban agriculture land which is being compulsorily acquired, then there is an exemption under section 1037. Let me repeat this, guys. Section 1037, 10 is exemption section, 1037 says that if there is an urban agriculture land, rural we will not talk about because rural is not an asset, so sale will not be taxable only. So if there is an urban agriculture land and is compulsorily acquired, both individually are taxed, but if it's together, that is urban agriculture land which is compulsorily acquired, then this is exempt under section 1037. This is exempt under section 1037. This exemption is only given to individuals, only given to HUF, because only they can be farmers, because this should be farming land and it should be used in the last 2 years for agricultural purposes by you or your family. That is section 1037. I hope this is understood, guys. Very important one. Again, I am repeating, guys, is sale of urban agriculture land taxable? Yes. Is compulsory acquisition of any asset taxable? Yes. But if both of them come together, is there an exemption? Yes, there is an exemption under section 1037. This is what we are talking about. Guys, his urban agriculture land got bought over for 37 lakhs. He did not want to sell it, but still he had to sell it. We'll see more on compulsory acquisition ahead. Next, guys, who doesn't want to relax in life? So at the age of 43, the surgeon says, enough of working hard. Now I want to relax at home while the bank pays me money every month. And he did that through something called a reverse mortgage scheme. What is reverse mortgage? In reverse mortgage, guys, you give your land or your house or your office to the bank. Literally no, only papers. And they pay you some money every month as a loan. Once a couple of years are over, you have to either pay it back, and if you can't pay it back, they sell your house, or if you're no more, they sell your house. This is reverse mortgage. Here you're not buying a house, you already have the house, you're giving the house to the bank and they pay you money. And when they pay you, let's say 1 lakh every month, is that your income? No, you have to pay it back, it's your liability, and hence this amount is exempt under section 1043. So section 1043 is an exemption. Yes, it is an exemption. So 1043, remember, 43 years reverse mortgage, whatever money you get from the bank is exempt under section 1043. And the last one, guys, on the screen, let's first read till here. 1018 we read, 1019, 1026 is above, Sikkim. 1032 is for 1500 per child, 1034 is buyback of shares, 1037 is compulsory acquisition of urban agricultural land. Now 1043 is reverse mortgage scheme. Perfect. Now the last thing that we are doing before the break is section 10AA. It's an awesome area, very interesting. 7 minutes is what we have. Let's finish awesome area and let's move ahead to a break. Guys, what is an awesome area? An SEZ is an awesome area. Why an awesome area? Because you get some amazing benefits if you operate in an SEZ. Guys, can I have one business in Mumbai and one business in an SEZ? Yes. Can Reliance have one unit in Bangalore and one unit in an SEZ? Yes. So in that case, guys, you can be in an SEZ and the SEZ gets some benefits. What is the benefit? First, this is not an exemption, this is a deduction. What is the difference and what do I mean by that? When I say this is a deduction, I mean whatever is your SEZ profits, let's say your SEZ profits is 30 lakh rupees. Where will it go? It will go to PGBP. Then it will be added to other heads of income. there will be clubbing, there will be set off, and it will go to GTI. Yes, this 30 lakhs will go to GTI, and from that you are minusing a deduction 10A. This is chapter 6A deduction. Yes. Now what is this deduction? They say that your export profit. What is export profit? First, focus only on the SEZ, not on other units. So in the exam, if they give you 2-3 other units like DTA unit, other units, if let's say I am a company like Reliance and I have 4 units, one is in the SEZ, only focus on the SEZ unit. What is the export turnover of the SEZ unit? That means, guys, how much is the SEZ unit exporting? Divide by the total turnover of the SEZ unit. So let's say you are exporting 70 lakhs from the SEZ and the total turnover of the SEZ is 100 lakhs. So what is this, guys? 70 by 100, that means your export is 70%. Into, this is export, into the profit. So what is your profit from the SEZ unit? Your profit is 30 lakh. So 70% of 30 lakh is 21 lakhs. Is this the deduction? This could be the deduction. For the first 5 years, you will get 100% of this deduction. That means for the first 5 years, every year you will calculate this, and whatever is the amount, that amount you will get as a deduction. For the next 5 years, you will get 50% of this deduction. So for the next, if you are in the next 5 years of operation, then you will get only 10,50,000 as a deduction under 10A. And the last 5 years, again you will get 50%. So basically 15 years, yes. But in the last 5 years, you want to get a deduction of 50%, that is 10,50,000. So you have to invest 10,50,000 in a reinvestment reserve account. What is that account? I'll tell you. But let's say you invest 11 lakh in the reinvestment reserve, no problem, you'll get entire 10,50,000 as a deduction. But what if you want a deduction of 10,50,000, but you only put 10 lakh in the account, then only 10 lakh deduction. That means you will get a 50% deduction, but provided you put that much amount in a reinvestment reserve account. That reinvestment reserve account can only be used to buy new machinery for this unit, because this unit is now in the 15th year or 14th year or 13th year. So you can use this money to buy new machinery within 3 years. And remember, guys, 10AA shortcut is awesome area. And remember, they will give you details of DTA unit, domestic tariff area unit. Ignore that. They will give you details of the total company. Ignore that. Only focus on the SEZ and find out the export profit. What is the export profit? The export percentage into the profit of the SEZ unit. If in the first 5 years, how much is the reduction? 100%. The next 5 years, 50%. And the last 5 years, again 50%. And just one last thing. When you're exporting, do you incur freight? Do you incur insurance? And do you incur telecommunication charges? Fit? Yes. Do you incur freight, insurance and telecommunication? Yes. If on the export turnover you've incurred this, then that has to be reduced from both your export turnover also and from your total turnover also. Basically, you have to ignore fit, yes, and fit will already be included, so you'll have to remove it if it's already included. Generally, it will be included, so you'll have to minus what is fit, freight, insurance, and telecommunication. So revising 10A, what is 10A? When we come back from the break, guys, we will look at questions also from exemption chapter. But what is 10A? 10A is not an exemption, it is a deduction. So first you will take your PGBP income, you'll go to GTI. After that, you'll get 10A deduction, yes. 10AA is awesome area of an SEZ. For 15 years, you get a benefit of the export profit. So every year you have to calculate the export profits. Yes, export percentage into profits. Export percentage is basically export turnover divided by total turnover only of the SEZ unit into the profits of the SEZ unit. So only focus on SEZ unit. For the first 5 years, 100%, next 5 years again 50%, and next 5 years again 50% if you contribute to a reinvestment reserve account, and that account has to be used to buy a new asset within 3 years. Also, guys, remember anything which is fit, freight, insurance and telecommunication charges, that has to be minused from this total turnover as well as export turnover. We will see an exam question and more questions. Guys, today we are not seeing any exam questions. We are only going to focus on module questions. When we, the last 2 days, we will focus on exam papers also and RTP, MCQs, etc. Perfect. Good job, guys. It's exactly that time that we'll end. I'll see you guys now in half an hour for the next session. Just slightly before 5 minutes before 6, we will log in and we will continue. I'm really loving this session and so hope you are doing the same. Thank you and see you guys in half. Thank you.